Fuck. This shit already started, bro.
Can everyone hear me? Well, let me unmute you guys first, and that might help. Let's see. All right, can everybody hear me now?
Yes, sir.
Yes.
Loud and clear.
Yes, sir.
Yep, we can hear you.
Yes, we can.
Yes, indeed.
That's okay.
See me now.
This is what we're gonna do.
Yes.
We're going to 1 second, let me mute everybody again. All right, so this is what we're going to do. We're going to give a couple more minutes for everybody to join in. If you guys was just watching what you was watching on the screen, that's a lot. That's a trade from May 20th. I want you to see how the money is going up and down. Look at the candlesticks, because this is your future. This is your life. And this is what's going to make you a lot of money. Okay? So this is what it looks like in real. This is what it looks like when you're in front of your computer. Okay, so we're gonna start off. We're gonna start probably around 8:10. All right, 8:10. So watch about 6 more minutes of this live trade on Apple, and then we'll be back. Okay. And if you have any issues as far as hearing me or any issues seeing me, please send type a message in the chat, a private DM to me. Okay.
Man, I wasn't even typing. Can I hear me?
So look at this right here, $420 right now on Apple, $420. Okay, $420 right now on Apple. That's the profit right now on Apple, $420. 465, 470, 460. Now keep in mind, this is how the money actually moves real time. In real trades, you might have like 15 heart attacks. Look at that, 515. Take a look. 515, 500. Now You made so whoever took this trade made $500 in a matter of 30 minutes. $500 in a matter of about 30 minutes to an hour. Ridiculous. Ridiculous. If you can hear me, type yes. If you can hear me, type yes. Okay, good stuff. Good stuff. So this is how I be when I be trading, though, right? So I'm looking at this. Say if I want to make $600, like, okay, come on, $600, $600. My heart start pounding, my stomach start hurting. I start looking around to make sure the police not coming to get me because I just made $500 in less than 30, 45 minutes. I'm just looking around. Come on, 550, 550, 550. Okay, I'm gonna get out at 550. I got the 555. I'm gonna stay in. I'm gonna go to 600. I'm get out when I get to 600. Nope, I'm gonna get out when I go back to 550. If I get back to 550, I'm getting out. Let me get out. Nope, not gonna get out. I'm staying. I'm getting to 600. That's how I be lying to myself. I lie to myself all the time. If I want to get to 550, instead of me getting out when I get to 550, what I do, I stay in. All right, and that's can be a good and a bad thing. All right. Okay. Jatarian, are you on? JT, are you on? Okay, you unmuted now. Try now, JT.
Yes, I'm on. How's everybody?
Okay. Perfect. Well, everyone, listen. Let's jump right into it. I'm going to mute everybody for a moment, then I'll be unmuting you and muting you throughout the rest of the day. Okay. If you don't know, my name is Christopher Jackson. And first and foremost, I want to give all praise to the Most High. A beautiful day allowing us to be here. But thank you for joining this course. And what I'm going to do today, what JT and myself are going to do today, we're about to introduce you to a whole new world, stock option trading. So what's going to happen? 2 or 3 things is going to happen. The first thing is, if you just saw what you just saw, you're probably mad because you're like, wow, why didn't I know about this a long time ago, right? But as we go through this first part of the class, you're going to be real mad because you're going to be angry because no one ever told you about this stuff, right? I was pissed off when I first found out. Like, listen, you telling me I've been busting my butt, running around here doing all this extra stuff, trying to work part-time jobs, killing myself, but when I can sit there and press 3 or 4 buttons and make a couple dollars, right? So we're going to take you through this. We're going to start off and we're going to introduce stock options to you. So we know different levels are in this classroom, but we're going to start at ground zero. So we're going to start at the beginner level and we're going to work our way to the foundational structure that we use on a daily basis. Okay. So if you have the skill set of knowing what candlesticks are and all that stuff, listen, just be patient with us. We're going to get to the nitty gritty, but we're going to start from the beginning. We want to make sure everyone has that strong foundation. When you're trying to build a house, you must have a strong foundation before you can build that house. Okay. So that's how we're going to start off. And what we're going to do is matter of fact, let me introduce JT to you. This is not JT Automation. This is JT, one of my partners in the Discord. So I'm going to introduce you to her. She's a beast when it comes down to trading options. I've learned things from her myself. When I say she's a beast, she's a beast. So JT, I want you to go ahead and unmute yourself and introduce yourself to the class.
All right, awesome. All right, thank you, Chris. So yeah, as he said, my name is JT. If you guys do join the Discord, it'll be Taryn in there, so don't get confused. It says Taryn on here. I have too many names, obviously. But so I started learning options actually last June with Chris. He was my first teacher. When he first, I guess, a couple months in started his class. So I took his class, and I was like in love. I was like, oh my God, just like he said, I never knew this. Like, how did I not know this? So I definitely love trading options. It's very exciting. You guys will see. We're here for support. It's a few of us that, help every day, 24/7. We're always answering questions, things of that nature. So, if you don't understand something, definitely feel free to send me a message, a private message on here. I'll be answering messages in the chat as well. But yeah, that's a little bit about me. And I'll let Chris take back over.
Okay, good stuff, JT. Appreciate it. Also, okay, yep. So also, Discord. Let me kind of give you a breakdown of what's going to transpire. So day 1, day 2, day 3, we're going to go through a lot of stuff, a lot of information, right? That following, so Monday, we're not just going to throw you into the middle of the ocean. Monday, we're going to send out links so you can join the Discord chat. And when you join the Discord chat, we have live Q&As there probably on a daily basis. You can ask any question you want to ask, right? JT, myself, the coach, Trader Joe, we'll answer your question. Even some people that's already in the chat, they answer your questions. Even when you're trading live or you're doing paper trading, you can ask all those questions in the Discord chat. Some days we have live Zoom Q&As like this one, for example. We send a link out and say, hey, we're having a Q&A today. Join in. If you can't join in, I will still email you the recording so you can watch it. This is going to be your support system. We are going to support you through this journey. This journey is not take 3 classes and you off on your own. No, this journey is you take these 3 classes, get the foundation, and you join our community, and we just continue to trade day after day after day after day. The more people we have doing the exact same thing, looking at different stocks across the board, the more money we all can make together. You can make more money as a village than as an individual. Okay, so that's what the Discord chat is. It's the support group. It's over almost 150, 200 people in there already, JT, and we're going to continue to add more people. So it's 30 days free. So after this class, I'm gonna send you a link. You join. The first 30 days are free. In those 30 days, you ask any question you want to ask, we got you. We're gonna take care of you, make sure you're good, okay? And then after that, it's just $49 if you want to stick around. You do not have to stick around, but if you want to, it's only $49 a month after that, okay? So next thing, this is how everything's gonna move. When we're going through everything, if you have any questions, send JT a direct message. Her name is Jatarian Gaines on in the chat. So if you look in the chat right now, she's type of message saying this is me, JT. This is who you send your messages to, because we don't want anyone. We got a lot of people in the classroom. We don't want anyone not being able to get the full thing because people blurting out questions. We're gonna have time for Q&A as well, okay? So any questions you have during any part of this, any part of the class we go through, send JT a direct message, and we have a moment where we go through all your questions. All right. All right. So let's jump into it. And another question that I've been getting a lot from people, yes, each class is recorded. So this class right here will be sent to you first thing tomorrow morning, probably around 11 a.m. It's not really first thing, but about 11 a.m. Eastern time, this recording will be sent to you. So if you happen to fall asleep on me tonight, or you have to leave early, this will be sent to you by 11 a.m. tomorrow, okay? So now, honestly, everything will be sent to you from here on out through your email, and probably I will notify you once everything is going to be up on the actual website. Okay, so let's start. Get everything going. Listen, I'm excited, y'all. Listen, what you about to see, what we're about to go through, you're gonna be mad at the world for at least 30, 45 minutes. Because you're gonna feel like the world lied to you. They cheated you out of everything, man. Let's get it. Let's go, man. The class started at 8 p.m. every day. Every day the class started at 8 p.m. to 11 p.m. And if my wife and my kids go to be asleep by the time I finish, I go an extra 30 minutes to 35, 45, 50, 60, 70, 80, 90 minutes, okay? So let's see what happens. Let's go. And matter of fact, speaking of my wife, I don't know if she's on right now, but let me give my wife a big shout out. Kristen Janine Gamble Jackson is my beautiful wife. If you saw my live of the day, it was Annie Mae, because she wouldn't get on the camera. So I wanted her to get on the camera. But give a big shout out to my wife for putting up with all my shenanigans and allowing me to lose all this money trading stock options. And she still haven't left me after I lost all this money trading stock options. So I appreciate her for that, not leaving me. I'm messing with y'all. All right, let's go. Share screen. Here we go. All right. Day one. Day one. Stock option class. Once again, remember, when we're going through this, make sure any question, make sure you send a direct message to Jatarian Gaines. A direct message to Jatarian Gaines. She's going to have all your questions right there. Then we're gonna have some Q&A and go over them. Okay. So what we're going to go over today, basically an overview of what stock options are. Well, this is an overview of the course actually. What stock options are, strategies. We're gonna go through day trading, scalping, swing trading, risk management, and emotions. Emotions are probably the most important thing when it comes to trading. Everything else can be learned, but controlling your emotions is the hardest thing to do. You're going to find out that you all are some greedy people when you start trading. You're going to find out that you're greedy. I know I found out that I was greedy. I thought I was pretty chill when it came to greed. But when I started trading and I was up $4,000, no $6,000, and I started talking to the screen saying, "You're gonna show me 10,000. You're gonna show me 10,000." And next thing you know, that $6,000 went down about $1,000. And I was still saying, "You're gonna show me 10,000." That's called greed. Okay, that's called greed. And that's what we're going to talk about as well. And that's why the Discord chat is so important as well. Okay. And then we're going to go over what is a stock. Okay. What is a stock? What is a stock option? And the difference between the stock and the stock options, right? We're going to go through all that, the type of options. We're going to set up your screen so your screen can kind of look like mine. I'm going to send that to you. I have a list of videos to show you how to use TD Ameritrade, Thinkorswim. Also show you how to set up your screen so it can look like mine. All those things I'm going to send to you in videos throughout this next 3 days. We're going to go over candlesticks, support resistance, moving averages. Listen, we're going over a whole lot of stuff. I'm going to break it down to you where it's in the simplest form, okay? Trust and believe it's going to be in the simplest form, all right? Okay, here we go. All right, what is a stock? Okay, first of all, a stock. If you own a stock in a particular company, basically you're buying ownership into that company. So say for example, Nike, right? Say if we want to buy buy a share of Nike, we now have ownership in that particular company. And if that company continue to grow as far as the stock price, our investment continues to grow as well. So that's basically what a stock is, right? Okay, so you own a part of the company. You are owner of that particular company. The stock market hours are 9:30 a.m. to 4 p.m. Eastern Standard Time. Okay, 9:30 a.m. to 4 p.m. Eastern Standard Time. When 9:30 every morning hits, I tell everybody, leave me alone. It's time to start trading stocks, but it never happens like that. Okay, somebody always calling my name in my household. I have 4 kids. And I call them Baby Kids. If you ever seen the movie Baby Kids, you already know, right? You already know. So the stock market is closed on weekends and all major holidays. Like for example, Monday, the stock market was closed. I almost went crazy because I couldn't trade. Then Tuesday, I came in, lost $3,500 because I was so excited. But I got it back. So that's a good thing about it. Okay. Now, what is a stock option? Okay. What is a stock option? So a stock option is different, right? You're basically saying someone that owns the stock, the person who owns the stock is saying, okay, I'm going to give you the opportunity to buy this stock from me, all right? I'm going to give you the option to buy this stock from me by a particular date. So if I meet Jay-Z on June 4th today, Jay-Z say, Chris, I'm going to allow you to buy ownership or buy some shares in Rock Nation by June 12th, okay? So you have to buy it by June 12th. If you don't buy it by June 12th, you have to sell it by June 12th, okay? And he's going to allow me to buy that option at the current price or a fraction of the price, okay? And we're gonna break it down. I'm gonna break it down in smaller details to you as we get into it, okay? The most important things to know about a stock option is your expiration date and your strike price. Strike price is somewhat important, it all depends, but expiration date is one of the most important things to know, all right? Expiration date is gonna be one of the most important things, you know. Sorry, I'm over here looking at the chat as well, so if I pause, I'm gonna look to the left, I'm looking at my chat, all right? Now, the advantage of trading options over stocks. Me personally, I love trading options over stocks, right? So one of the advantages are a discounted price. So if Nike is trading at $100, right? And I want to buy 100 shares of Nike, okay? If Nike's trading at $100 and I want to buy 100 shares of Nike, it's going to, sorry about that, it's going to cost me $10,000. $10,000. 100 times 100, $10,000, right? If I did my math correct. Let me pull out my handy dandy notebook and make sure I did my math right. 100 times 100. Yep, 100 times 100, $10,000, okay? Now, if I want to buy 100 shares of Nike with a contract, I will probably spend $100. Yes, I said that correctly. I will spend $100 for 100 shares of Nike if I buy it as an option. Okay? Hold on 1 second for me, everybody, okay? All right, sorry that I'm back. So if I want to buy 100 shares, yes, for 100 shares of Nike with one contract is $100. Okay, $100. That's a major discount. The only problem is I have to sell those shares or that contract by a certain date. That's the difference. With a stock, you can hold that forever and have it forever. With the option, you have to sell it by a particular expiration date. The thing about it is, with the options, you make more money faster than with the stock. With the stock, you make money gradually over time, right? Now, one of the disadvantages is no ownership. When you buy an option, you do not have ownership. Okay, so you do not own that company. Okay, because you have an option to buy it by its expiration date. So if you decide to buy it, then you will actually have ownership. But if you do not buy it, you will not have any ownership. Once again, you must sell by expiration date is one of the disadvantages. And you can potentially lose more money on a lower investment if you trade stock options. Okay, so you can lose more. You definitely can lose money, and that's why we're going to teach you risk management later on in the class. All right. All right. Types of options. Types of options. And I'm going to send this to you guys, so you don't have to write this down right here. I'm going to send all this to you. Okay. Types of options. You have call options. All right. And you have put options. A call option is when you believe the stock price will increase. You think the stock price will go up. Okay. So a call option means you're thinking that the stock price will go up. All right. A put option, you're saying you believe the stock price will go down. Okay. You think the stock price will go down. And for some reason, everyone, when they first started trading options, I was the same way at first. they always just want to do straight call options, right? Because that's what it like. Okay, we're all optimistic that the stock market is going to go up, right? We want the stock market to go up, but this is the thing about it. When you're trading options, I don't care if the stock market goes up or down. Honestly, I prefer to wake up and the whole world is crashing and the stock market is crashing, because I can easily sit there, hit a button, and just make so much money. When Corona hit and the stock market like crashed and everything went on a 95% to a 99% discount, people made millions of dollars because they were buying put options. They were betting on the stock market going down. And it happened in the snap of the finger that people even realize it happened. But people made millions of dollars, right? But most people they feel so comfortable with saying everything is going to go up. But I enjoy put options more. I would rather wake up and see puts all day than calls. But once again, call options, the stock price is going up. Put options, the stock price is going down. Okay, so JT, let's stop right here and let's see if let's answer a few questions. If we have any questions that were sent to you. Let me unmute you, JT, 1 second.
All right, can you hear me, Chris?
Yep, I can hear you.
All right, awesome. So I answered a few questions, but a couple people asked, what is the strike price? They wanted to know what strike price is. I think you're going to maybe get into it later.
Yes, we'll get into that. Once we jump into the system, we'll get into the strike price. Basically, the strike price is the price that you're buying your contract under. So say, for example, once again, we're going to use Jay-Z Rock Nation. Jay-Z say, Chris, I'm going to give you an option at $100, okay? And you can buy this contract next Friday, right? But you have to buy it at $100 regardless, okay? Regardless if it goes up or down. If it goes up and it goes to 120, I still have the option to buy it at $100. But if it goes down to 80, I still have to buy it at $100 if I decide to buy it. So that's the strike price. That's just your price that you and that company or that entity has decided that you would buy this particular stock by the expiration date, if you decide to buy it. All right, JT, let me unmute you again. Okay, JT.
So someone asked, do puts move faster than calls?
So yes, sometimes puts definitely move fast. Listen, when I say I love puts, I love them. Like I love it. Like I'm telling you, this is so selfish of me, right? It is, and I hate to say it, it's selfish. I'm not ashamed of it. I want the market just to say, everybody panic, just drop. Like I wake up sometimes, like just drop market, because it's so easy just to put in and just ride the train all the way down. I'm going to show you that, right? We're going to see it live action. I'm going to show it to you. But yes, puts can move faster than calls, but calls can move faster than puts. It all depends on what type of action is happening, the price action up or down. But both of them agree.
All right, so your Jay-Z example, someone said, in this example, is Jay-Z betting against you?
No. So basically, we're both kind of in the same place. It's basically we're saying, okay, listen, we don't know if the stock price is going to go up or down. No one knows, right? But Jay-Z is basically saying, listen, I'm willing to risk my option contract. This person is going to pay me to buy my option contract. And if I'm right, I get this money. And if he's wrong, he gets the money that he gains from it, right? So it's not like he's betting against each other. You come together and you're making a contractual agreement together and saying, hey, this is what we're going to do. You're going to give me the option to buy at this price. If it goes up, you still got to buy it at $100, no matter if you make profit, right? You know, so that's the best basically. So you're not betting against each other, no.
I'm sorry, my sound isn't so great, someone said. I apologize. Let me try to speak a little louder. All right. Someone asked, how long before contract expires?
So there's different expiration dates, okay? So you have most stocks that I trade are weekly expiration dates. So every Friday, the contract actually expires, okay? But if the day is, say for example, the day is Monday, June 7th, I can buy a contract out for 2 years or 3 months or 6 months or 3 weeks. You can buy it out however long you want to, right? Or you can buy it out for a weekly contract. Okay, so they expire different time frames. Once we jump into the system, I'll show it to you as well.
All right, Chris. And do you use anything other than Thinkorswim, or do you just use Thinkorswim? Someone's asking about E-Trade, but I think you just use Thinkorswim.
So I use Thinkorswim, but this is the thing about it. You can use any platform for what we're going to teach about the foundational part. You can use any platform. The main thing is, as long as you know how to maneuver through your platform, for example, as long as you know how to go find the exponential moving averages or how to draw your support and resistance lines, as long as you know how to find those things inside of your platform, you can use any platform. And remember, if you have any questions, make sure you send a direct message to Jetarian Games, okay?
Chris, it may be easier if they just send it in the chat, because like it's not sending like as direct, like it's still coming in my main chat with everybody else. So it's like,
okay.
Yeah, so it's not coming like it's separate messages, you know what I mean?
Got it. Okay, well, however you want to do it.
Okay, you had a few more questions.
Okay.
Someone asked, do you like shorter time periods than monthly? Not sure.
It all depends. So once you will see, you will have a better understanding when we go into support and resistance today, which ones we actually like to do as far as, because it's different things that I do. If I'm day trading, normally I use shorter expiration dates. So for example, I may use a weekly expiration date. The day is Monday, I may buy one that's going to expire on Friday if I'm doing a day trade. If I'm thinking about swing trading, I may do 2 to 3 weeks out.
All right. If the price goes down below the strike price, is there a limit to the money you lose?
No. So you only can lose the amount of money you put in. If you put in $300, you can't lose anything more than $300. But what I want you to know is, don't think of the strike price. The strike price has nothing to do with the money that you're making, winning or losing. So don't even think about a strike price. I honestly want you to put the strike price out of your mind. Don't even think about strike price right now. Okay.
All right, and then a couple other questions I think we're gonna get into later, like
Okay.
how do you find stocks that people are trading more of, and you know how to set up and use paper money on Thinkorswim. Also, the question: can you trade after your contract expires? You can't. Well, after that contract expires.
Yeah, no, you're not. That contract is done. You want to make sure you sell each contract before it actually expires, unless you want to actually buy that particular stock. And the other two questions, we will get into those questions. And the reason why you want to sell them, because say for example, you have a contract and it's actually in the money, like, right? So you made money off of it. So you said it's going to get to the 120 strike price, and it did get to the 120 strike price. If you do not sell before then, keep in mind, you have a contractual agreement stating that you will buy this stock at 120. So now if you bought 100 shares, if you bought one contract, which equals 100 shares, now the system is going to try to take money from your account that equals 100 shares of that stock. So you're going to have 100 shares times by 120, and the system is going to try to buy that from you. And if you don't have the money in there to do it, it's basically going to take the profit you already made.
All right. Someone said, can you buy back if you are about to lose money on and stretch the time out?
Yep, exactly, all the time. For example, and we'll get into that later on in the class. But say for example, if your stock, if you're going to call thinking the price is going to go up and it's dropping down, right? You can buy more contracts as the stock price goes down, so you can make your average out better. So when it starts to go back up, you're making money faster.
All right. Will you explain the difference between day trading and swing trading?
Yes. Okay. Day trading is when you're going to be in a trade for that particular day. Say for example, today is Friday. If I'm in a stock today for Friday, I'm going to buy it today and I'm going to sell it today. That's a day trade. Okay. A swing trade is when you may buy stock on Monday and you may stay in it till Tuesday, Wednesday, Thursday, Friday, Saturday, however long, for a couple of weeks. Or you may just hold it overnight. So if you hold a stock overnight, that's considered a swing trade.
All right. Then someone was asking about the terminology there, as far as did you say anything like PM or anything like that? Someone was asking about terminology.
PM.
like pre-market.
Oh, I haven't mentioned anything about pre-market yet, but we will get into it. We will get into it. I do see one.
Go ahead.
Go ahead.
Yeah, they were just asking about the terminology, so I was kind of confused on that one. The terminology that we're using as far as, I'm not sure what they were confused about. It was JJ. I'm not sure what what we said that.
Have JJ just explain it more in the chat, and then we'll come back to it. We'll come back to that one. Okay. So any more questions regardless related to what we just went over before we move to the next one?
No, not right now. It's more like what you're gonna get into. So you're good. Okay,
perfect. So good stuff. Keep those questions coming, okay? JT's gonna keep a track of those questions. Keep those questions coming, and then we're gonna keep having Q&As. But what we're gonna jump into next is the candlesticks. Okay. All right. Candlesticks. Now, these are those green things that you're going to be seeing, or those red things that you're going to be seeing on your trading screen. And hopefully it means you're making money, not losing money. Okay. That's what we're going to make. That's what we're going to try our best to do. Okay. All right. Okay. So the basics of a candlestick. All right. This is the basics of a candlestick. A green candlestick. A green candlestick right here. This means the stock price is increasing. The stock price is going up. Okay. The stock price is going up. It's also called a bullish candlestick. So if you hear somebody say the stock market is bullish, that means their stock market is going up. Okay. A bullish candlestick shows that the price has increased over time. That's the green one. The red one is a bearish candlestick, meaning the stock price is going down. Okay. The stock price is going down. So you hear somebody saying bearish. If you hear them say this is a bearish market right now, that means the market is going down. That means puts all day. If you hear someone say it's a bullish candlestick, that means you want to be possibly in calls all day. Okay. Call options. All right. All right. So when we're looking at a candlestick, this is what you're looking at, right? You're basically looking at price over time, price action over time. This is very, very important. You're looking at price action over time. All right. So for example, whenever you see a green candlestick, the stock price opens down here at the bottom. Okay. The stock price opens down here at the bottom. All right. So say, for example, this is 5. And don't worry about my writing, like chicken scratch. I know, sorry about that. And it closes at the top. It closes at the top right here. Okay. Now, each candlestick represents a certain amount of time. Okay. So for example, let's say this candlestick equals 5 minutes of buying and selling. This is 5 minutes of buying and selling. Okay. 5 minutes of buying and selling. So the stock price opened at $5 and it went all the way up here to $20 in 5 minutes. Okay. It went from 5, it opened right here at the bottom at 5 and it closed at the top at $20. All right. And this is 5 minutes. It can be 5 minutes. It can be 1 day. It can be 1 week. It can be 2 minutes. It can be 1 minute. And I'm going to show you that when we get into the system. Okay. But a candlestick, the basis of a candlestick is price action, buying and selling over amount of time. So whenever you see a red candlestick, a bearish candlestick, the opening price starts here at the top. So now the 20 is at the top now. So we're at the 20s at the top. And by the time that those 5 minutes is over, everyone started to sell, flooding the screen, flooding the scene, selling. Boom, all the way down here to $5. So it went from $20 down here to $5 in 5 minutes of buying and selling. So all of this in between is just buying and selling, buying and selling, buying and selling. But by the time those 5 minutes were over, it went all the way down here to $5. Okay. All right. The basis of a candlestick some more. So right here, remember, you got your bullish candlestick for your green, right? And you see these little sticks at the end. I call them sticks. People call them wicks. That means at some point in time, the stock price went up to that level at some point in time, okay? Or it went down to this level at some point in time, all right? Now, let's keep in mind, we're saying each candlestick, for this example, we're saying each candlestick is 5 minutes worth of buying and selling, okay? 5 minutes worth of buying and selling, all right? So remember, each green candlestick starts right here. It opens right here at the bottom. So say, for example, this opened right here at 10. It opened right here at 10, okay? At some point in time, that stock went from 10 down here. It went down to 5. It went down to $5. The next thing you know, it went up, boom. People start buying, everybody buying, everybody buying, everybody having a good time, boom. It went all the way up here to $20. And before those 5 minutes ended, it came all the way back down here, boom, and closed right here at $15. Okay? So once again, remember, every green candlestick opens at the bottom right here. So in this particular example, it opened right here at 10. People started selling, fire sale, went all the way down to $5. Next thing you know, the buyers say, no, sir, we get in there. Boom. Everybody buying, boom. It hit $20. Next thing you know, when it hit $20, people say, let me sell, take some profits. People start to sell, boom, 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 boom. And it closed right here at $15. Okay? $15. Now, to the bearish candlestick. The bearish candlestick is right here. Remember, it opens at the top of the body. It opens at the top of the body. The top of this body, say the top of this body is 15 again. It opened at 15. And at some point in time, it went up to right here. Say this is about 17, right? Went up here about to $17. And next thing you know, people said, no, something happened in the market. Everybody started to sell. Boom, everybody's selling. Money being made because people buying puts and everybody's selling, and boom, it came all the way down here to $5. And when it got to $5, people said, okay, I'm gonna buy in some. And boom, they bought in some. And voila, it stopped right here at $10. So over the course of 5 minutes, the stock that you was in went from $15 to $17, all the way down to $5, up to $10. And what I call that, people, I call that mini trade attacks. I call trade attacks for heart attacks. Because when you in a stock and you see your stock go from freaking $15 to $17 to $10 to $5, if you in a call, you having a heart attack, right? If you in a put, you're like, I'm getting this money, right? If on the other side, if you in a bullish candlestick and it starts right here at 10 and you're in a put, it goes down to 5, you feel good at first. Next thing you know, it goes from $5 all up to $20. You're like, oh crap, you losing your mind, you're having a heart attack, right? You're gonna have a lot of heart attacks or trade attacks when you trade. Emotions. I have a heart attack every day, a trade attack every day. Well, every hour, every 5 minutes, actually, to be honest with you. All right. Second. Okay. All right, right here again, this is a different way to look at it. Basically, the exact same thing. And keep in mind, you will have access to this. I will send you this deck. All right, so once again, opening price down here. The stock went down here. Boom, people start selling, selling, selling. Next thing you know, people start to buy. Boom, people buying, 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 buying. Next thing you know, people start taking their profits. It cools down and it closes right here. Okay. Now let's say, for example, this is a 1 day candlestick. Like this is a 1 trading day candlestick. Say, for example, that candlestick started right here at $5. Brandon, stop writing on my screen. I just let you in the class, Brandon. Stop writing on my screen, man. I'm messing with you, bro. I just saw your name pop up, but you good. I just had a conversation with Brandon. I think Brandon literally signed up at like what 7:31 or 7:32 or something like that, I think, and got into the class. I was just shutting it down. Okay, so boom, we open here at $5 this is a whole day, okay, whole day of trading. It opens here at $5, right? So say, for example, you're in a call. Let's say you're in a call, and it's a call option, and it's a swing trade, all right? The stock price that you got into, clear right quick. All right, the stock price that you got into right here was at $5, okay? So at $5. So boom, the stock price immediately drops. Boom, it goes from $5 to $2. So now you are losing money. You are in the negatives. You are negative now, okay? So now you say you started at, you was even, now you're probably a negative, so you're a negative $100, okay? Now the people start saying the sellers sold at $2, and next thing you know, the buyers say, no, sir, we're buying. Boom, shot up. I'm back to my 5. I'm at 6, 7, 8, 9, 10. Listen, we making money. We in the game now, right? We up $200-300. It's still going. It's still going. Now, right now, you feeling like Rocky. You know what I'm saying? You feel like Rocky running through Philadelphia on top of the thing. You know what I'm saying? Get off me, you know? Looking around, make sure the Fed's not coming because you done made so much money in this short amount of time, right? Then boom, you up, you up, you up, you up. The stock price went to $20. You might be up $1,000 right now. Next thing you know, everything cools down. People start to sell. Boom, it drops back down, drops back down. Now you're like, oh crap, oh crap, oh crap, oh crap. Boom, the market closes right here, $15 right here. You've made probably $500-600 for the whole day. That's kind of how it goes, right? Same thing over here. It opens up right here, $15. It shot up to $17 again. Boom! People said, nah, the market's going down. Everybody's selling. Everybody's selling all the way down here to $2, and then it comes back up here and closes at $5. That's a candlestick. When you look at this screen that I'm gonna pull up in a few, you're gonna see this everywhere. This is what you're gonna see. You're gonna see red and green candlesticks. It's gonna look like Chinese to you. But if you understand what I'm saying right now, and we're about to have a Q&A on it, but if you understand what I'm saying right now, you will have it down packed as far as what you're looking at when you're reading this, when you're reading the charts, okay? And we're gonna go through them in a few. All right. All right. The next thing, these are called doji candlesticks. Doji candlesticks. Doji candlesticks. So a doji candlestick basically means the stock price opened and closed at the exact same spot. Okay, so it opened. So right now, say this is 5 minutes. Each candlestick is worth 5 minutes of price action, buying and selling. It opened right here at 5. This stock went all the way down here to 1, then shot all the way back up here to 10, then went all the way back down here to 5, all in 5 minutes. That will drive you crazy. It drives me crazy all the time. All the time it drives me crazy, okay? That's called a doji candlestick. Same thing here. It opened right here at 5 again. It went all the way up, boom, went up. Next thing you know, went all the way down, boom. Then went right back to the middle and closed right there. You like, really, bro, all that? I was happy one moment I made money, then I was sad I was losing money. Then you come back right here to the middle. Come on, really? Now, these two candlesticks right here, as we get into it, these are powerful candlesticks. These are very, 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 very powerful candlesticks. You will need to remember these candlesticks. When you see these candlesticks, this means something is about to happen, okay? So basically, the stock opens right here at 1, for example. It opens at 1. The stock shoots all the way up here to 10, okay? Boom, shoots up to 10. And next thing you know, so check this out. The stock started at 1, it shot all the way up to 10. You win the money, you making plenty of money. The next thing you need to be selling immediately. But what you're gonna do, because you're gonna realize that you're greedy, you're gonna say, I'm at $10, like $1,000 profit for me. Sure, I'll make $1,500. And what's gonna happen is it's gonna do this. It's gonna go all the way back down to 1, and you're gonna be sick. When I say sick, you're gonna be sick, man. You're gonna be calling yourself the dumbest person on earth. I call myself the dumbest person on earth probably about 15 million times a day. I do the dumbest stuff ever, right? But sometimes I don't. But that's what's gonna happen. But eventually you're gonna say, I don't want to be the dumbest person on earth. I want to be the smartest person. When I get to 7, I'm gonna sell. I ain't gonna get to 10. When I get to 7, I'm gonna sell, right? Okay, so the next one, same thing. It starts right here at 10. It goes all the way down here. The buyers, the sellers say, I'm selling, all the way down here to 1. But then the buyers say, oh, this is a great price. Let me jump back in. Boom! They jump back in. It goes all the way back up to 10, and it closes right there. Okay? Those are called doji candlesticks. They open and close at the same price. All right? JT, let's stop right here and take some Q&As. Let me unmute you. Go ahead and unmute yourself, JT.
All right.
So any questions related to the candlesticks and things?
Someone asked, are they going to be red and green or just lines?
Red and green. You will see it in a moment. There will be red and green. Now the doji candlesticks can be gray sometimes, and I'm gonna tell you, I'll show you why when we get there.
All right, and then as far as the candlesticks goes, someone wanted you to explain that doji one more time.
Okay, so with the doji candlestick opens and closes at the exact same place, right? So for example, right here, it opened right here at $5. All right. It went down to $1 right here. Then it shot all the way up to $10, and it closed right here again, right at $5. So basically did a whole bunch of nothing, and then it closed at the same spot. It went up, down, and closed right at the exact same spot. And yes, every candlestick represents a certain amount of time. So for my example, these doji candlesticks represents 5 minutes of buying and selling. So for 5 minutes, the stock price went from 1 to 10 back to 5. Opened at 5, went down to 1, went up to 10, went right back to 5, and then it closed. You're on mute, JT.
Okay, can you hear me?
Yep, I can hear you now.
All right, so someone asked, is the capital T bullish?
Oh man, who said that?
That is Jay Benjamin.
Jay Benjamin. I'm gonna ask you a question. Do you think it's bullish? Yes or no? Sheena said yes. Before Jay Benjamin can answer, Sheena said yes. Sheena, send me your Jay Benjamin said yes. Well, she beat you, Jay Benjamin, to it, but just Sheena, send me your cash app. You just won $100. Okay. And Jay Benjamin, I'm gonna send you $50 because you asked the question. All right. So Jay Benjamin, send me your cash app. Sheena, you send me your cash app. So yes, that is very good. This right here is a bullish candlestick because it started here at $10, right? And it went all the way down to $1. But next thing you know, it shot all the way right back up to $10. That means that the buyers are controlling the market. The buyers are controlling the market. Okay. And whenever the buyers are controlling the market, you are bullish, right? Laura says it sounds both to me. So now the next one right here is bearish. It's bearish. And the reason why it's bearish is this. It started right here. Everybody started to sell. Buy. Everybody buy. But next thing you know, the seller's saying, nope. Boom. It goes right back down. Shoot right back down. And now the sellers are in control. So when that next candlestick opens up, it's probably going to be a red candlestick and it's going down. Okay. And I'm going to show you some examples of it. All right. All right. Next question.
Hey, Chris, can you explain how there can be, just because there's a lot of questions about it, how there can be different time frames for the candlestick, like 1 minute chart, 2 minute chart?
Yep. So what I'm going to do is I'm actually going to show you that on the screen. So hold tight on that answer. I'm going to show you that on the actual Thinkorswim screen where you can see that each candlestick represents a different amount of time. Okay.
All right. And then someone asked, what makes the 2 to the right so powerful?
Yeah, that's kind of what I just went over. And does that answer your question, what I showed you? Does that answer your question when I said that it was bullish and bearish? Whoever asked that question?
I think it may have, because it was an older Brandon.
Yep, right was bull, yes. Any other questions for the candlesticks, JT?
I think that's it. I asked Bree. She was asking what you mean by open and close, like the market. But she was trying to figure out when you're saying that the candle open right here for the bullish and close right there for the bullish. You know, I think that's what she was asking about. I was trying to get clarification.
Okay, 1 second. Move this off the screen. I'll say that one more time, JT.
So someone was just confused about when you were going over the open and the closing of each candle. They were thinking in terms of like the market opening and closing, I think.
Oh, okay. Yeah, no. So listen, for example, matter of fact, I'll break it down to you when I get into the screen, but each candlestick, say if this is a 5-minute candlestick, each candlestick will last 5 minutes. It will show price action for 5 minutes. So for example, right here, if the market opens at 9:30 and at 9:35, this candlestick may have formed, right? But from 9:35 to 9:40, the second candlestick may have formed. Okay, so 9:30 to 9:35, this candlestick may have formed. But from 9:35 to 9:40, this candlestick may have formed. So this candlestick right here will always be on your screen. Then this candlestick will always be on your screen. Then the next one, then the next one, then the next one. Now I'm gonna show that to you in a few, okay? You're on mute, JT.
All right, so
yes, C. Jones. Candlesticks is trading behavior. So when I say price action, that's basically trading behavior. Yep. I'm sorry. Go ahead, JT.
No, I was about to answer a question in the chat. Kind of just what they were asking. The 2 to the left were neither. I was just saying that the one with the T at the top was bullish. The one with the T at the bottom was bearish.
Right. Exactly. That's true.
Someone asked, can you predict when a doji will happen?
Say that again, JT.
Just someone was asking, can you predict when a doji will happen?
No, but you will see it forming. You will actually see a doji forming, but you can't predict it. No. You in the stock market, we don't try to predict anything. We make educated guesses based off of historical data.
Will you show one more time, Chris, how you know if it went down or up first, like as far as the 2 dojis? That's what they want to know. How did you know where, like, because it's both in the middle, kind of, how you knew it went down or up first?
No, it didn't matter. Like, so I don't know if it went up first or down first. You know, it just basically I'm just saying that's what it did. So at some point in time in that particular 5 minutes, it went up, went down, or went down, went up. There's no way to actually say which one went first.
All right, you good, Chris.
Okay, perfect. All right. So some of those questions, we're gonna jump into the screen right quick. All right. So as of right now, if you feel like you understand what a candlestick is, let me see you put yes in the chat box. All right, good stuff, good stuff, good stuff, good stuff. Perfect, beautiful, beautiful, beautiful. Let's go. All right. All right. Can everybody see my screen now? Okay, perfect. So as you can see, this trade is still going on right now. Okay, so I'm still at $500 for the day on this trade on May 20. This trade was May 24th. Right now it's 110, and I'm at $530. Okay, so I'm just keep that running for you. I'm at $530 still. Now we're going to jump into a few other things. Take this on demand off. All right. Now, what we were just discussing, one of the questions people were asking about time frame of a candlestick. All right. This is how it looks. This is how it looks when you're trading. Okay. You see, you got your green one right here. And keep in mind, the green one does not have anything in it. It just has the green lines around it, right? And then the red one is our full. Okay. So look at this candlestick right here. All right. That's a green. That's one of your bullish candlesticks, the green bullish candlestick, right? Take a look at this one right here. You see how you got your long wick right here? Got your wick down here. So that means if I zoom in on this one, okay, y'all see this right here? Does that look clear to you guys? So what I see is this right here. It opened right here. That's where it opened it. It's like at 124.05. That because right here you see this is the price over here. These are the prices. So it opened right here. It either went up or down first. I don't know, but for this example, I'm gonna say it went down first. It went all the way down. Boom. Down here to 123.85. Next thing you know, the buyer says, "No, sir, we about to buy." Boom. They started to buy. Started to buy. Started to buy. Started to buy. Boom. And it came to right here. The top, then it came down here and closed right here. Okay, everybody see that? Now that is yes, 2 minutes exactly. That's 2 minutes, right? That's a 2-minute candlestick. The first candlestick of the morning. That's a 2-minute candlestick. Now let's change it to 5 minutes. Let's go to 1 minute. Okay, now we're looking at 1-minute candlesticks. Okay. So this is what it looked like on a 1-minute time frame. Okay. So in a 1-minute time frame, keep in mind, in order to get 2 minutes, we got to put one 1-minute candlestick and one 1-minute candlestick equals 2-minute candlesticks, right? So you put these two candlesticks and it looked like the candlestick we just showed you. Okay, so this is what it looked like on the 1 minute candlestick. It went all the way down here, boom, it shot up, and then boom, this one came. These two candlesticks forms this candlestick right here, the one we just went through. You guys see that? Okay, those two candlesticks form this particular candlestick. All right, now let's look and see what the first candlestick of the day looked like at a 5 minute timetable. Boom. It looks like this. Okay, now this is what on a 5 minute candlestick, it looks like this now. Okay, y'all getting it? Y'all follow me? You see how it goes? So now this is 5 1 minute candlesticks and 2.5 2 minute candlesticks. All right, now let's go through it again. Let's go to the next. Let's go to a 15 minute candlestick. This candlestick right here, this is the first candlestick every time. This candlestick is 15 minutes worth of buying and selling. 15 minutes worth of buying and selling. So in this one candlestick, you have people buying and selling stocks for 15 minutes. Okay, it opens at the bottom, it closed at the top. It opened down here, and then after 15 minutes, it worked itself up to right here. Okay. Now let's go to, that's a 15 minute candlestick. Let's look at a 1 day candlestick. A 1 day candlestick is right here. Right here. That's the 1 day candlestick. So for right here, the days opened right here. It started right here and it closed right here. That's a 1 day candlestick. Okay. That's people buying and selling that entire day. All right. Yep. We'll show you what time frames to look for. What's the main ones we look? The main ones I focus is the 2 minute and the 5 minute. When I'm actually day trading, when I'm swing trading, I look at the 4 hour and the 1 day for the most part. Okay. But we'll get into that later on today. So JT, let's start while we had, since people can see it on the screen right now, let's stop and see if we have any Q&As right quick. Any questions? Why everybody can see it on the screen.
All right. So someone was asking, so is each candlestick its own individual or are they all related?
No, so everything is, so you keep in mind, the buying and selling is for the actual stock, right? So the buying and selling is for Apple. So right now we're on Apple 1 day. So that means everything that's in this one candlestick over here is all day. Okay, that's February that's today, I think. June 4th. This is June 4th. Everything that happened in June 4th is right here. If I do look at the 1 day. Now, if I drill down into this one candlestick and I go to a 4 hour candlestick, now for this day, June 4th, June 4th, which is today. Now I see 2 candlesticks. Okay. Now I see 2 candlesticks because the first one I just showed you was for 1 day. Now these 2 are for 1 day, but it's for 4 hours and 4 hours. The first 4 hours of that 1 day was right here. The second 4 hours is right here. Okay. Now, if I want to drill down further, I want to go from 4 hours to everything is 1 hour. Now look at this. This is all 1 hour, 1 hour, 1 hour, 1 hour, 1 hour, 1 hour, 1 hour. I'm drilling down into it If I want to go down to 15 minutes, 15 minutes, so on and so on and so on. Okay. Any other questions, JT?
Yeah, they're asking about the body. I know you're gonna get into it. They're asking a few people ask is it the bigger the rectangle, the better?
Yes, 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 yes. So we're gonna get into that too. But you see this thing, right? I call them big boys. I call them big boys. When you see that big boy, you done made some money. Like right here, for example, look at this. See how big this candlestick is? That means for this whole hour, this is 1 hour worth of candlesticks. That means it opened right here and it went all the way up here and it held all the way up here. That's powerful. That's a big boy candlestick. When we get into it, that's going to be a sign for you to possibly get in on a call. Okay? Okay? Now, let's go find us a big boy. Let's go find us a big boy red one.
Hey Chris, will you show everybody where you're seeing if it's the particular time frame of the candlestick?
Oh, good question. Yeah, thank you. Sorry about that. I got ahead of myself, y'all. Right here. You see right here it says 1 hour. Right there. So that says 1 hour. I can change it to 15 minutes. Now everything is 15 minutes. Change this to 30 minutes. Now each candlestick is 30 minutes. Okay? Y'all see how that works? Everybody good?
All right, Chris, and one last thing, as far as candlesticks goes, a few people are confused about the screen. I guess, you're just showing how the candlesticks works. They're just confused about what the screen actually means.
What you mean? You mean like the entire screen they're looking at right now?
Yeah, exactly.
Oh yeah, so I have a tutorial for you. So I'm gonna give you a tutorial probably tomorrow or the next day. It's a tutorial on how to use TD Ameritrade, and it's gonna take you through everything on TD Ameritrade. I'm gonna show you all this stuff, the drawings, the 1 hour. I'm gonna give you a breakdown of so you can have that knowledge, okay? So the main thing is what I want you to focus on right now is focus on exactly what I'm telling you. Like, so right now we're focused strictly on candlesticks. Everything else on the screen does not matter. That green line doesn't matter. That yellow line doesn't matter. That red line doesn't matter. The only thing that matters right now is the time frame, like the 5, the 30, the 1 hour, the 4 hour, and the candlesticks. That's all that matters right now, okay? All right, let me ask you this question. What does this look like? Right here. What does that look like? Doji, exactly. Good stuff. And that doji is to the bearish side or the bullish side. Exactly. Good job, Frankie. Good job. Good job. Now, when you see this, and the reason why I say this is a powerful candlestick, and when you see this bearish candlestick right here, and it's a doji start to form, what happened is each candlestick tells a story. Okay. So what happened was this. This candlestick opened right here, right? It shot all the way up here. People was buying. The next thing you know, this is an hour candlestick. Remember, I'm on an hour time frame right now. So each candlestick is 1 hour of buying and selling. 1 hour of buying and selling. So boom, it started right here. It shot up. People buying. Next thing you know, people said, no, sir. The sellers started selling. Boom. It went all the way down here. Boom. Shot down. And it came back and it closed right here. Now, this is a bearish candle. This is a bearish doji candlestick. And watch what happened next. Red candlestick. Red candlestick. Red candlestick. Red candlestick. Red candlestick. It went straight down for the next 1 hour, 2 hour, 3 hour, 4, 5 hours. It went straight down. So if this is you, would you be buying a call or a put? Bam, Shanice was the first one. Was that Shanice? Did I say that? The Shanice? Good job, puts everybody, exactly. If anybody said a call, I'm kicking you out of the classroom. No, I'm not kicking you out of the classroom. But don't buy a call like that. That was, who was first? Shanice, you just won $100. Send me your cash out.
I'm sorry, I don't mean to. Yato, he said then you will put option. First.
Shanice, JT just blocked on you. She
sorry.
said you wasn't a winner. Yato is the winner because Yato came before you, Shanice. Shanice just blocked on you. Yato, I'm sorry, I apologize, I didn't see you. So yeah, Shanice, take that over JT in the back room. But Yato, send me your cash out. You just won $100 because you said to put option first. Make sure y'all send that.
I'm gonna have to send Frankie one. I'm gonna have to send Frankie one myself because he put as well. So
okay.
Moving so fast. It's moving so fast.
It is moving fast. Bree say, what about Frankie? They looking out for you, Frankie. They looking out for you, bro. All right, cool. So yeah, definitely respect, bro. Respect. But Yato, you send yours too, though. All right, so boom, here we go. So now you guys see how that worked. Now we keep in mind, we're gonna put this whole thing together for you, but we want you to understand what you're looking at when you see a red candlestick, when you see a green candlestick, okay? We want you to understand that. Let's see. All right, okay, now, what I want everybody to do is this. I want everyone, 1 second, let me grab some. All right. Let me stop sharing so you can look me in my eyes. Can everybody see me on the screen? I want you to look in my eyes. Everybody, this is a notebook. We're about to write a book. And I'm telling you, look me in my eyes. If you write this book and you follow this book, you will start to make money and you will change your life. Hands down. Hands down. You will start to make money and change life. So if you do not have a notebook, go get you a notebook right now, a piece of paper, an old bill, whatever you got, right? And on the first page, what I want you to do is write down chapter 1. Matter of fact, don't even put chapter 1 first. On the front page, put down goal. Okay, what's your goal? And on your paper, I want you to write down, what is your monthly goal? How much money do you want to make on a monthly basis extra? Okay. All right. So say, for example, let me put up a blank paper right quick. All right. No, don't tell me how much you want to make. But listen, I'm with you. I want to make it too. So check this out. Right here, put down how much you want to make. Say if you want to make, let's say $1,000 a month. I'm just use regular number. Say you want to make $1,000 a month. So I want you to write it down. $1,000 a month, okay? On average, each month has 20 business days. On average, each month have 20 trading days, okay? So I want you to put down 1,000 or whatever your number is, right? Whatever your number is, I want you to divide it by 20, okay? And that will tell you how much money you have to make a day trading stock options, okay? Okay. So for me, for example, that was have me at $50. Right. And you may say, Chris, seriously, really, are you really writing this and saying this is true? Put this in a notebook, first page. And the reason why is because of this. When you're trading stock options, the thing is this, you have to have a goal that you're going for. If you're just in here just shooting a bobo, you're not going to take it serious. You may be up $1,000 and you like, shoot, I want to make more money. And then you will lose that $1,000 because you don't have anything that you're trying to acquire. For example, when you were growing up in school, if you had someone at home who made sure that when report time came, your grades was good, or you had a test coming, you passed your test, you made better grades. But if you came home with an F and nobody said anything to you about it, you didn't care about the F. It's the same thing here. If you have a goal in mind to make $1,000 a month, think about this. How many people have said, man, if I can just put one of my car payments up for 1 month, or one of my insurance payments up for 1 month, or one of my rent payments or my mortgage payments up for 1 month, I'll be good. Put that number down. Say, okay, if my car payment $500, $400, whatever it is, say that's how much you want to start making a month. If it's $500, you just got to make $25 a day, and you work towards that goal, right? And then while you're working towards that goal, what you're building is you're building on that foundation. And as you build on that foundation, you're gonna get stronger and stronger and stronger. And now you're gonna start seeing that $1,000 a month turn into $2,000 a month, turn into $3,000 a month, 4,000, so on, so on, and so on, and so on, because you understand the foundation. Okay. Now that's the first page. Okay. Now type in chapter 1 on the next page, chapter 1, and put support. I can't type. Support and resistance. Okay. We're about to write a book. Okay. The first chapter is called Support and Resistance. All right. Support and resistance. And we're going to jump into that right now. Before we go, any questions, JT, we have before we move forward?
There's a couple questions keep asking. What's the most common time frame you look at? I know you look at 5 minute and 1 minute when you're day trading.
Yep, I look at the 5 minute, 2 minute, and some of the 1 minute when I'm day trading. Yes, when I'm swing trading, I look at I look at like the 4 hour and the 1 day. But we're about to get into that right now. Any other questions?
That's all for right now.
All right, good stuff. All right, so what we just did, y'all, first thing we just did, the first page of the book is our goals. Write down our goal. What is our goal a month? Divide that by 20. This is how much money you got to make a day. All right. Second thing is the next page, chapter 1. Chapter 1 is called Support and Resistance. Listen, it took me so long to figure out support and resistance. When I first started trading, I didn't use it. But once I started using support and resistance, and I'm like, oh crap. It's like you was blind and you put glasses on, now you can see. Like you at the doctor's office and you got your eyes in the thing and you looking, it says, right, what's that bottom line? It's blurry for you. Then you boom, put them glasses on, shoot, that's A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P. Y'all thought I was gonna say elemental P, didn't you? Y'all thought I was gonna say elemental P. Nope, I say L, M, N, O, P. Yep, definitely do. All right, boom. So support and resistance. That's how the market opened up for me when I saw that. Okay. So now let's jump right into the support and resistance. This is going to be your framework. All right. This is putting your bricks down at the house that you're trying to build. All right. Everyone can see the screen now, right? I want to get rid of all of this stuff. Case studies. Get rid of it. Get rid of it. I want to get rid of volume 2. All right. Support and resistance. All right, somebody throw a stock out. Well, now we do Apple. I'm cool with Apple. All right, with Apple, 1 year, 1 day. All right. So once again, when it comes to time frames, remember, time frames are right here. What I showed you right here, the day, you have the one day, 1 minute, 5 day, 5 minute, whatever you want to break it down to, that's what you can do. When I'm creating my support and resistance, I always start off with the 1 day, 1 year, 1 day. But I'm getting ahead of myself, and I want to show y'all this first. Booyah, here we go. All right, everybody can see my screen. Is it big enough? All right, so support and resistance. All right, this is the framework. You get support and resistance, you ready to go make some money. All right, first thing first. Listen, for some strange reason, all day I've been saying first thing first, rest in peace, Uncle Phil. It's stuck in my head for some reason. I can't get it out of my head. And just now when I said first thing first, I just start rapping the whole J. Cole song. First thing first, rest in peace, Uncle Phil. For real. Definitely. It's Frankie saying for real. Yeah, no doubt. All right, so let's get into it though. Support and resistance. Support. This is the technical definition. A price level where a downward trend can be expected to pause due to concentration of demand or buying interest. It sounds great, doesn't it? Listen, what I want you to do is, this is what support is. Look down at your floor. Look at the floor you're standing on right now. That's your support. When you walking on your floor, that's your support, right? Okay, now resistance. Look up at your ceiling. Look at your ceiling. That's your resistance. It will not let you go through, right? That's your resistance. So whenever you're thinking about support and resistance, support is the floor, okay? Resistance is the ceiling in your house. It's the ceiling in your house. If I throw a ball, that ball is going to bounce in, but that ball is going to hit the support, the floor, bounce up to the ceiling, bounce off of the ceiling, come back to the floor, bounce off the floor, go back to the ceiling, right? Support and resistance. Does that make sense? Right now, the support, do you understand what support and resistance is? Perfect. Good stuff. Good stuff. Good stuff. All right. So support is your floor. Now we're going to go through some examples. Support is your floor. So when we're trading a stock, or when we're trading a stock, there's always support and resistance for that particular stock. So when you think about support for a stock, that means on the support level, there's a whole bunch of buyers. Shy say, I said yes, do I win $100? No, not this time, but on the lookout, we're giving out some more money, okay? But support, that means there's a whole bunch of buyers right there at that support level. So if my floor in my house is $5, say the support level in my house is $5, and that means I have a whole bunch of people ready to buy this stock at $5. That's my support. If my ceiling is $20, right, in my house, look at your ceiling right now and say it's $20 right there. That means you got a whole bunch of people sitting right there selling. Once it gets to that level, they're going to sell at $20. Okay, that's what it means. Support means you have a whole bunch of buyers right there. Resistance means you have a whole bunch of sellers up there. Yep, support, lots of buyers. Resistance, lots of sellers. Exactly. Okay, now let's look at this example right here. Okay, so right here on the screen, this line right here, this blue line right here, let's say that blue line equals $5, okay? It equals $5. And this red line equals $20, okay? Boom. So Our support line is $5. Our resistance line is $20. Okay. And this green line, I mean, this line right here is our this is our candlesticks going up and down. Okay. So let's start right here at the bottom. Okay. So we buy into this stock right here at the bottom at $5. Okay. We buy in, the stock price is going up. It's going up. The stock price right here is going up. Do I need to zoom in or everybody can hear me? I mean, everybody can see this right here. Do I need to zoom in? Good. Okay. All right. So boom. I zoom right here. I buy in at $5 and I'm riding this wave up. I'm going 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 up. Boom. I hit my ceiling in my house. I hit my ceiling in my house. Once I hit my ceiling in my house, what happened next? The ball hit the ceiling, and what did the ball do? The ball came right back down. Boom, 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 boom. Where did it go to? Where did it go to? It went right back to where? The floor. And what is floor called? Support. But what do we know, people? At the support level, what is it? What is that support level? A lot of buyers, right? A lot of buyers is at support. So boom, the people start buying in again. So it goes up, small little pullback. It goes back up to $20. It hits my ceiling again. What's at my ceiling right now? A whole bunch of sellers is at $20. So what happens? Boom, they start to sell when it hit $20 again. So where does that ball go? I just threw at my ceiling. It goes back to my floor. And what is my floor? Support. And what's at my support? A whole lot of buyers. So a whole lot of buyers, right? Now, what's going to happen now when I throw that ball off the floor? Where are we going back to? We're going back to the ceiling. Boom. So now we're headed to the ceiling, right? We're headed to the ceiling. But this time, instead of us having a small little tennis ball, we bouncing up and down, we about to throw a big bowling ball. Look at your ceiling, right? Look up at your ceiling right now, right? And act like you got a bowling ball. You're gonna take a big old bowling ball and you're gonna fling it and throw it as hard as you can up to your ceiling. What is that going to do to your ceiling? Somebody else, you say, we're going to break the ceiling. Somebody say damage it. Yes, we're going to break the ceiling. Exactly. So that's what happens in real life when you're trading. You're going to break your resistance because your ceiling is your resistance. So it's going to break through resistance now. Boom. It broke through resistance. Let's stop right there. JT, we got any questions before we move forward? Any questions? Any questions?
All right. So someone was asking what makes new support.
Hey, we're going to get into it in a minute. That's the next thing we're going to go to. Next thing we're going to go to. Any other questions?
That's good. You good for now. Someone just asked, why did it break through?
Good question. Great question. Why did it break through? So in the stock market, you're going to have different price levels where people are going to, the sellers are going to start to respect that price level, right? Because think about it. If you're a seller and you're sitting there at 20 and you see the stock keeps coming to 20, you sell. It comes to 20 again, you sold. It comes to 20 again, you're like, shoot, crap. Maybe I should change my resistance to 25 and make more money. Or maybe I should change my resistance to 30 and make more money because it keeps testing the same resistance, right? For example, well, I'm about to say this don't always work. Okay, no example. If you got a kid, right? If your kid comes to you 15 times and asks for a bag of chips, eventually what you gonna do? You're gonna say, man, listen, bro, you can have these chips. Matter of fact, take the whole box of chips, man. I don't even want, man, listen, I'm gonna go to the grocery store. I'm gonna buy you a whole bunch more chips because you are consistent. Or you won't let you're gonna keep asking to get these chips. And I'm gonna give you the, yes, no, my wife say Noah Jackson, exactly. So eventually you're gonna give in and give the chips up. That's what happened with resistance. You're gonna keep on punching a hole in your ceiling. You're gonna keep on throwing that ball at the same spot in your ceiling. Look at your house, look at your ceiling in your house right now. You're gonna keep throwing that ball at that same spot in your ceiling, and eventually you're gonna put a dent in that ceiling, and eventually it's gonna break because you, like Steve Urkel told Laura Winslow. Somebody, $100 whoever tell me what Steve Urkel told Laura Winslow. $100 to whoever saw Steve Urkel told Laura Winslow. Nope, not that. Yes, who said it? Candace Jackson. I'm wearing you down. Candace Jackson, send me a cash app, you $100. Steve Urkel told Laura Winslow, I'm wearing you down. You keep throwing that ball at that ceiling, you are going to wear that ceiling out. And eventually it has to go through. Candace Jackson, send me a cash, and her last name Jackson too. We probably could, right? So you're gonna eventually knock it out the frame, okay? That's what's happening. You keep hitting it. And when you keep hitting it, people are paying attention to it, okay? Now, good stuff. Candace Jackson, make sure you send me your cash out and send it to the chat, or direct message to me or something like that. So I don't forget, because I'm definitely forgetful. All right. So we're good so far to continue, right?
Yeah.
Right.
Oh, go ahead.
No, go ahead.
Someone was asking, is this what happened in each candle?
So think about this. Not what happens in each candle, what happens in each trading period, right? And I'm going to show you this in a few, okay? I'm actually going to show you this on the actual chart where you can kind of see it and be like, okay, I see it now. I see the price action. I see the price action. I see when it broke. All right. All right. And then I'm going to show you guys my the last trade that put me over $30,000 for the challenge. I'm going to show you one 5-minute candlestick that gave me all that money. The last $3,000 I made. I'm going to show you one candlestick that did it. Okay. And it has something to do with support resistance as well. All right. Am I jumping ahead of this Elliott wave theory I've heard about? Not sure, but let's keep moving. You let me know. Okay. Now, when it breaks resistance, now keep in mind, support was at $5, right? Resistance was at $20. Okay. Now, our new support is $20. Did I hope that didn't go over your head? Now support is $20 because the ceiling, so if you got a 2-story house, once that ball goes through the ceiling, now that ball will land on the second floor of your house. So now the second floor of your house is now support, okay? And the ceiling on the second floor is now your resistance, okay? Does that make sense? Now the second floor is your support, and the second floor ceiling is now your resistance. Okay. All right. Good stuff. So now resistance, let's say now resistance is $40 and support is $20. All right. Now, what's very important when you're thinking about support and resistance, once it finally breaks through, boom, it breaks through, right? Now look what happened when it broke through. It broke through, and what did this line come back and do? It went through and it came back to the new support, right? When it comes back to the new support, we call it exactly a pullback. We call that a pullback or testing support. Testing support, because what I want you to remember is this. What's in the middle of your second floor right now? Because it broke through the ceiling. So what's in the middle of your second floor? Thank you, Frankie. Yes, well, everybody who said it. It's a big old hole. It's a big old hole in the middle of your second floor. Okay, so as soon as a stop breaks resistance, you do not jump in. It's not time to jump in yet, right? You have to make sure that big old hole that's in the middle of your ceiling, that ball does not come back down there and run back down to the floor, to the $5 floor again, to the support again. Because if that ball falls down through that hole, where is it going back to? It's going back to the support, that $5 support. Good stuff, y'all. Good stuff, good stuff, good stuff. Okay, now let's keep moving right quick. Let's keep going. So say, for example, it tests the $20 support right here, and it bounces up, and it goes again. The same thing. The stock market does the same thing everywhere. Thank you. Never buy high. Never buy high. Somebody just said you never buy high. Okay, I'm going to get into that in a minute. Boom. It came down here to support. It comes up, it hits resistance, it hits your second floor ceiling, it works its way back down to support, the second floor, boom, it works itself back up to the ceiling again, boom, it works itself back down, then it works itself back up, then boom, it breaks through. Now on this example, it broke through on the third time each time. That third time is significant, okay? It is significant. That third time is very significant, and we'll get into that later, right? But it broke through your 40, it broke through your 40 resistance level, okay? And then it's the same thing over and over, y'all. Now this 40 is now supported, okay? Now, somebody said in the chat, they say never buy high. This is very important. This is why it's good to know your support and resistance as well. If we know right here, this is a strong level of support. This $5 mark right here is a strong level of support. This is where we want to buy. We want to buy at the 5, and we want to ride it up to the 20. So we're going to put all this stuff together. Now, keep in mind, this is chapter 1 of your book. When you open this book, the first thing you're going to see is your goal. The second thing you're going to see is chapter 1, support and resistance. Okay, so we want to get in as close to 5 as possible, and we want to ride this thing up to 20, our resistance. You sell before you get to resistance. If it goes to 20, you sell at 19. Do not be boo-boo the fool. Look at me, close to my eyes. If you can see my eyes, look at me. Do not be boo-boo the fool. If you don't know who boo-boo the fool is, I don't know who boo-boo the fool is either. This is my whole life growing up. We always said boo-boo the fool. Okay? Don't be boo-boo the fool. I've been boo-boo the fool so many times in my life trading. It's ridiculous. If you know you have resistance up here, you sell before you get to resistance. Okay? If resistance is 20, you sell it anywhere between 18 and 19. Take those profits. Okay? And then if it hit resistance and go down, you get back in at 5 and you ride that wave back up to 20. Once again, you sell before you get to 20. Okay? If it does the same, if it goes down again, boom. At 5 again, you buy in at 5 again, and you ride that wave back up to 20. And you sell right before 20. Okay? Every time. Every time. You do not, never buy here. Never buy at 20. Never buy at 20. Okay? You only buy at 20 once 20 becomes support and it's been tested as support. Okay? And we're gonna get into that. We're gonna get into that in a few. All right. So Q&A. But JT, before we move into the system, do we have any other questions?
Yeah. So how do we know? Well, as far as the first question, is this only for day trading or swing trading as well?
Swing, this is for everything. Everything. Day trading, swing trading, everything. The difference is you're gonna be looking at different time frames. For swing trades, you're gonna be looking at like the 1 day, the 1 week, the 4 hours. Day trades, you're gonna be looking more so at the 5 minute and the 2 minute or the 15 minute. Okay. Yeah, this is for Forex too. This is for Forex, for crypto. This is for everything. Support and resistance for everything. Okay. All right, next question.
All right, how do you know when the price hits resistance?
Yep, we finna get into that next. We finna draw your lines, show you how to draw your lines next. JT is a beast at this, so she gonna definitely go over this some too as well. Any other questions?
Yeah. So will there always be buyers when you are selling at 19?
Oh yeah. It's about once you hit that, when you're trading live, once you hit that sell button, immediately you out. Maybe give it about 3 to 5 seconds, you out for the most part.
All right, I think a couple other questions you about to go over, Chris.
Okay, sound good. So let's jump into the screen. So before I move forward, as far as support and resistance, ceiling and floor, do you guys feel like you understand what I'm saying? I know you might have to go back and watch some of the replays, get more understanding, but do you feel good and not lost? All right, good stuff, good stuff, good stuff. Good stuff. All right. All right. Everyone can see the trading screen now, right? All right, perfect. All right, support and resistance. Number one question everybody want to know, how in the world do you draw your support and resistance? How do you find your support and resistance? Okay, so when you're looking at support and resistance, you draw those lines, you draw the lines yourself. You go into the system and you find them yourself. Okay. So the first thing, how I normally do it, JT's going to show you how she does it as well. I'm actually starting to adopt JT's way of doing it a little bit more than I do it currently myself. But I'm going to show you how I always do it right now. Whenever you're looking for support and resistance, you always want to find, keep in mind, your ceiling and your floor and everything else in between, right? Is the candlesticks, right? So the first thing I'm looking for, I'm on the 1 year, 1 day time frame right here. 1 year, 1 day. That means each candlestick that you see, each red candlestick and green candlestick you see equals 1 day. 1 full 9:30 to 4 o'clock trading day of buying and selling, okay? So the first thing I want to do is find the highest point. This is my highest ceiling that I have on my screen. And that's right here. You see where it says 145.09. That means that's the highest this stock has ever been in the past year. Okay. And what I do is I mark it. You see that green line up here just now? And we're going to show you how to draw that green line. But you see that green line up here, right? Everybody see that? All right. The next thing I do is I find my floor. My floor is the lowest level, the lowest number. And as you can see right here, it says 80.19. So boom, I come over here to the 80.19, put my marker right close to 80.19, boom, double click, and now you see my lines, right? So now I have my ceiling and my floor. So if I'm building a house, now I have the highest level of my house to the lowest level of my house. Okay? Everybody good so far? All right. Now what I'm looking for is in between these two areas, the ceiling and the floor, I'm looking for levels that's been hit 2 or more times. What does that mean, Chris? Hit 2 or more times. For example, I'm going to start from here. Let's look up right here. Let me get my drawing thing. Right here, for example. If I look right here, where are you? If I look right here, y'all see why I marked it? This level stands out to me, right? It's just up there, it's big and it's up there, right? that level has been hit one time. And I just start looking to my left, I start looking to my right and just seeing what I see. Boom, it was hit right here 2 times. Okay, let me keep on going. Boom, it was hit right here 3, 4, 5 times. This red one is 1, this green one, this green one was hit right there. Now keep in mind, each candlestick is 1 day, okay? Then I keep on coming over and I see that it was almost hit right here. So for right there, that level was hit 1 time right here, 2 times right here, 3 times, 4 times. Hope y'all can see that. If I need to zoom in, let me know. 4 times, and then 5 times right here. So for me, that is a level of resistance or a level of support. So I come right here and boom. That's a level of support, a level of resistance for me, okay? Now keep in mind, it's not just a line. It's not just a line. It's more, it's like a look, it's a small area, right? It's an area, okay? If I go right here, you see that it was hit right here. That's zoomed in enough. That's good. I need me to zoom in some more. So you see right here, it was hit right here. Then boom, I come over here. It was hit right here, right? Then if I keep going over, you can see that it hit right here. So when I say it hit, that means it hit, then it went back the opposite way. It didn't just keep going. It hit right there, then it hit right here, boom, and it kept going, okay? So it hit like 3 or 4 times. So I feel that is a level of support for me because it hit that level and then it stopped when it hit that level, okay? So this is the 1 year, 1 day. Okay, that's where I start off at, the 1 year, 1 day. All right, then I keep on going. And then I keep on going. Let me keep following my way down. What else do I see? A level that was hit a few times. I just go from left to right. If I see anything that stands out, okay, this stands out to me right here. 110. Okay, and let me tell you why this stands out for me. So right here, keep in mind, each candlestick is 1 day. Okay, so if we're looking at this candlestick right here. Look at this cluster right here. Okay, and let me zoom in on this cluster. Banana cluster right here. Okay, so you can see right here, here we go. You can see right here, boom, it hit this level, it hit that level and stopped for 1 day, boom, hit the level again, that's another day, hit this level again, another day, then boom, it broke through it. So boom, it broke the resistance and hit this level again, boom, hit right there, hit right there, hit right there again, hit right there again, hit right there again, then it started to make itself go, then it started to go up. Okay, so it hit this level about almost 7 to 8 days. It was right around this level right here. Okay, this is back in August 2020. Now let's keep moving over and let's show you when it hit the levels again. Boom, right here, hit this. Right quick. So boom, right here, right here, boom, hit this level right here. It bounced up, then boom, it came down close to it again and hit it. Boom, right here. Then it bounced up, then boom, it hit it again, and it kind of consolidated right here on it. Hit it again, it's consolidating around it. Boom, hitting it again, consolidating around it, consolidating around it, hitting it again, consolidating around it, consolidating on it, and then boom, it finally went up. Okay, so that level, it hit right here, went up, came back down, hit it again, went up, came back down to support again, kind of broke through it, and now this is resistance, and it hit resistance, boom, kind of broke through it a little bit, and it's hitting it, boom, hitting it, and it's just kind of around that area, and it keeps hitting and it's hitting around that area, and it move forward on up, right? Okay, now let's keep moving over and see if it hits it again. Yep, market was consolidating around that same price range. Okay, so boom, for 3 more days, consolidating. So it came up, it came right here. So right here, after it hit here, it came up, and it's coming down, coming down, coming down, coming down, then boom, it hits this level, come up, boom, hit it again, consolidation around it, then boom, it bounced off of it, and it keeps going. Does it make sense what I'm saying when it's hitting this level? Is either hitting this level and bouncing up, or hitting that level and consolidate on that same level over and over and over. That's called a level. That's going to be one of your levels of support and resistance. Let's keep in mind, resistance turns into support, and support turns into resistance. And we keep going over and over and over and over and over and over and over, and we see it hasn't gotten back to that level in a while, right? Another level of support right here. Look at all this right here. Okay. We see it hit, boom, went up, came down here, boom, went up, came back down here, hit again, then boom, went up some, came back down, hit again, boom, went up, came back down, hit again, boom, went up, came back down, hit again, consolidated, went up, came back down, hit again, then boom, it ran. It ran. Okay. Now, this is how you draw your levels. I'm gonna let JT draw some too. But before I let JT draw some, I want to give you an idea of why is this important? Okay. Why are these levels? And I only drew a few of them. So what I would do next is this. I got my 1 year, 1 day. Now I would go to my 6 hour, my 180 day, 4 hour, right? And I would draw lines on the 180 day, 4 hour. Okay, and you'll see my lines for my 1 day is still there. Okay, the lines are still there. But then I will come here, do the exact same thing. Now I'm drawing lines here. You see right around this area. Hit once, hit. That's level support. So boom. Draw this level right here. That's level of support for me. Okay, that's the level. You just keep on going every time you see them. Come right here, hit this level, went down, hit, came down right here, boom. Level of support. Does everybody see what I'm doing right now? Nope, you keep all your old lines. You keep your old lines. Every day, I never remove my lines unless it just get too hectic, right? But keep your lines because if you made it a level of support one time, there's always a level of support, okay? Keep your lines. And the base of what you're doing is, you got your big ceiling, and you got your big ceiling for the top of the house and your bottom floor, right? Then inside of the house, you're making more ceilings and floors, okay? Inside of those candlesticks. So what happens is this. What I know, because I trade Apple sometimes, right? I know because I draw support and resistance for Apple all the time. Support, the entire stock market is based off of historical data. Historical data. Okay, I'm a data person, right? So when I'm looking at my data, everything is based off of historical data. A strong level for Apple is in between 120 and 118. If you ever see Apple close to 120 and 118, you immediately buy a call. Because historically it tells us that whenever Apple's hits this level of between 118 and 120, it gives you a nice run up. Okay, prime example. Let's look right here. Okay, right here. Prime example. Let's go a little bit more. A bit more. All right, right here. Yes, 180 days is good. It's six months worth of price action, right? So it's pretty good. So right here, this is why I say historical data. If I'm looking right here, boom, it hit 180. I mean, it hit 119 basically, right in between that 120, 118 mark. Once it hit this level, it shot all the way up to 127. And it stayed around 127 for a while. Then it came all the way back down here again. This is the 120 level. After it hit that 120 level, keep in mind I said 120 to 118. It hit that 120 level, boom, it shot all the way up from 120. And this is for you swing traders. If you swing trading, that's what I'm telling you. Whenever Apple hits 118, 120, you buy a call for a swing trade and let that thing ride. Boom. Why does my thing keep going away? Here we go. Boom, it hit 120 right here. It shot all the way up to 128, 129. Then look what happened after that. It shot down, broke through resistance, shot all the way back down to what? 118. We're at 118, 119, consolidated some, went up some, consolidated, dropped through down to 116 and came back up here and consolidated. And then look what happened. Right here again, it went from that 118, shot up to 127 again. That's resistance, right? Went to 127 again, and when it hit 127, what did it do? Boom, it went right back down here to 120 again. Went from 120 to 124. What did it do? Boom, it shot right back down to 118, and it consolidated around this area for a while. It consolidated. So right here, it consolidated around that 118, 119, consolidating. Boom, it hit that 119 again, and look what happened. Baby, boom, that thing shot out. Broke through resistance. Boom, it broke through resistance. And it went off to the races, all up to 134. All the way up to 134. Okay, that's money. And all because if we look at historical data tells us whenever Apples is in between that 120 and 118 range, you buy a call and you ride that thing to 127. And historical data tells us, because we go back from with using historical data, it tells us when it hits 127, what does it do? Let's go back here. Let's start here. Right here, 118, 127, bounce down. 118 breaks through 127, goes to 128, right? Boom, goes back down to 119, 118, right? Boom, 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 come up here. Hits 118, 119 again. It goes back up to what? 127 and goes back down to 118 again. 3 times it did this in the past 6 months. And what it does again, it hits this 118 again. You say, okay, it's 118. I know to buy a call because it's as long as it doesn't break this 118 and go lower, I'm buying a call, I'm holding on. And what happens? It goes up. It goes up to what does it go up to? It goes up to 127. 127. And yes, you sell before it hits resistance. And this is what it does. You sell right here before it hits resistance. But now, something different happens though. Something different happens in the story. Normally it hits 127 and does what? Goes straight back down, right? But now it hits 127 and it consolidates. It's consolidating. Uh-oh, it's trying to go to resistance. It's trying to go. Steve Urkel is wearing lower down. He's wearing lower down. Boom, 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 boom. Now, Steve has wore lower down. The big bowling ball has went through the ceiling. Hallelujah. The bowling ball has went through the ceiling. And what do we say? the ceiling still has a big old what there? A big old hole there. So what we want to see is, we want to see this candlestick test resistance. It tested resistance. The next candlestick opened up here. Now we can feel comfortable. Keep going, keep this thing going up on the call, and boom, boom, boom. It's riding, it's riding, it's riding, it's going. Okay? Does that make sense, everybody? Support and resistance. Okay, good stuff, good stuff. Now keep in mind, this is only chapter 1. We're gonna build out 4 chapters, and we're gonna put all 4 chapters together, and it's gonna all tell a story. So this same scenario we just did with Apple, we're gonna come back and revisit it on every single chapter, and you're gonna see the story that it tells. It's a beautiful story, y'all. It's a beautiful story. It's a beautiful love story. Beautiful love story. Beautiful love story. Beautiful love story. Okay, now, JT, it's on you for you to break down. How you do support resistance. Now I actually love how JT does her support resistance. I'm actually, like I told you, I'm actually borrowing some of her stuff. So I'm going to let you share the screen, JT. Multiple participants. Yep. All right, she's all yours. I'm gonna go on mute. I'm gonna take over the chat, okay?
All right, Chris, don't go on mute yet. I can't figure out how to draw. I think it's the whiteboard, but it won't let me give access, like how you draw the, circle everything and all that.
Okay, so on your, let me see. I might have to make you the host to do it. Let me see. I'm gonna make you the host.
Right.
Okay, so now you're the host, okay? So I want you to do one, now share your screen.
All right, I think I got whiteboard up now. Well, that's whiteboard, but let me see. Can you see my screen?
No, I see a whiteboard. So, and what I'll be drawing on is it's like a tool thing. It's called annotate. On that bar, it has the mute, the start video, all that stuff.
Mm-hmm.
It's called, I think it's like annotate or something like that.
Yeah, see, I got that.
So that's what I use when I be drawing stuff.
Can you see my screen?
Yeah, I can see your screen now.
All right, annotate down here. You see it, right?
Yep. Well, I don't see annotate, but I see you got the little pen showing now. So draw something right quick.
Okay, there we go.
I see it now. Yep, and when you got it, you're gonna have to go between that and the mouse. You're gonna have to be clicking the mouse button and the drawing thing to go back and forward.
Okay, no problem. Thank you.
All right, cool.
All right. So let's see. I guess let's see what people want to look at. Give me a stop, somebody. Got one, Chris?
My bad. Somebody said Tesla.
Tesla. All right, awesome.
Yep.
Go to Tesla. Actually, Tesla on my watch list already. All right, let me clear all this out. All right, we'll show you guys how to actually draw, and the drawing tools, how we make the green lines and all that. We'll show you how to do that. So I'm going to actually start from the 1 week chart. Please let me know if you can hear me, because I know mine is typically low for some reason. I don't know why, but let me know if you can hear me.
Yeah, I can hear you clear. You good? All
right, awesome. So I'm going to start with the 900 right here because it's the high. So let's see.
Hey, JT, hold on one second, JT. Sorry about that. I mean to cut you off. So you see what how JT did her. Remember, I said I started off with the 1 year, 1 day and moved to the 6 month, 4 hour. JT starts off at the 1 week, right? So she goes out further on the outside, and she started with the 1 week, which is what I've been kind of adopting lately as well. Sorry, I didn't mean to cut you off. Go ahead.
No, you good. All right. So only reason I start with the 1 week, and I sometimes I do it 1 day too, like Chris. But the bigger the time frame, so you can go to the monthly chart, the weekly chart, the daily chart. But the bigger the time frame, it gives you the better level. So you're going to see how many times that stock actually hit that level that many times. Because of course, on this chart, it's the 1 week, and of course, it's right here. Let's see. Oh, it won't let me drop here, but this is the 1 week up here on my cursor. So it just gives you the best levels because each candlestick actually represents 1 week. All right, so what we're gonna do I'm going to actually draw the 900.4 because that's the highest that Tesla has ever been on this weekly time frame. So that's what we're going to chart, 900.4. So like Chris was explaining, that's your ceiling, that's your resistance. So you know, if it actually breaks that, it has the potential to continue to go higher. But that's our ceiling for right now. So we're going to draw that. And for now, since we're in the current time, what I'm going to do is I'm going to come over here to this side. Since over here, let me show you. Since these are the most current weeks, I didn't mean for that to zoom in, but over here in this area, this is the most current weeks. So we're gonna go there and just show exactly like that time frame. So as you guys see, like Chris was talking about the floor, you see how these candlesticks all kind of just like in the same area. This candlestick for this week, that next candlestick for this week, all these are just representing 1 week each. So I'm gonna kind of like just draw a line right here because it hit it on this red candle right here. It hit it, bounced off. The next week it hit it, bounced off. It didn't break it. It kind of tried to come back down, couldn't break it. Went back up a little bit, came back down. And for 1, 2, 3, 4 weeks, it tried to hit the same level at 550. So we know 550 is a great level of support because it's tried to hit it at this point, 1, 2, all these weeks. It's tried to hit it so many times. So that's how I know that that level is a great level because it can't actually break through that level right now. So next, what I'm going to do, I'm not even going to draw any more lines on this level. I'm going to go to the next time frame. I'm going to go to Chris time frame, 1 year, 1 day. All right, and you see how it carries over. So that 550, you can see it over here on this corner, that the 550 is right here. All right, so I want to ask you guys actually, I want to ask someone, what do you think will be the next level that I should draw? Chris, let me know what someone says.
700.
700? Yep, that's a good level. Why did you say 700?
Somebody said 775 too. 775, 750, 650.
Okay. Okay. I'm gonna go with 700 first. So, because 700 actually is a good level. So why did you say 700?
It bounced off of it a couple of times, or a lot actually.
Yep. So when we were at this support, like Chris taught you, it bounced off the support one time, came up a little bit, bounced off it again, and went all the way up 700 right here.
It was dancing in that area.
Exactly. It was dancing in that area. And this was back, this was back in December. But if you go to, like Chris said, history repeats itself. So we're gonna go over here now. And you see how that 700 level is real, like it's important because it hit it one time right here. It kept hitting it. This is the 1 day chart. So each candlestick represents 1 day. So all these days, it tried to hit 700 and couldn't break it. It went back down. It didn't break 550 though. So you know 550 is a great level of support. It didn't break 550, but at the same time, it hit 700 all these times right here. It kind of broke it right there, but it came right back down. It came all the way down back to 550 and couldn't break it. And now it's channeling in between 550 and 700. So that shows that those levels are good levels. So now we're going to make more intraday levels. As far as what I mean by that is like levels that matter right now. So what I'm going to say is, all right, I'm going to chart this level right here because once it broke the 700, it tried it so many days. 1 day, 2 days, 3 days, 4 days, couldn't break it. 5 days, finally broke it. It got all the way up to here, 780. So that's what I'm going to chart. And I'm going to show you why I charted 780. Sorry, let me see if I can try it again as far as like drawing. Don't let me draw at all. Just keep zooming in.
Oh, you got it. Go back and click on the annotate thing again, and click on the drawing line.
Right here?
I can't see it on your screen. It's not showing it to me.
Not showing it to you? Okay.
But just hit the draw, hit the draw thing again, and it should let you draw.
Okay. Still
That's
not.
weird.
Yeah, it is. It never, every class, it doesn't let me do it. I don't know why.
Yeah, the last thing happened last time. Yeah, that's crazy. I don't know.
All right, no
How many,
problem.
JT, somebody asked a question, how many lines do we need to draw?
It just depends. So like you want to get the best level. So you want to see exactly, you want to see the stop hit that level many times. So if you know that it couldn't break it that many times, and I'm going to show you on this example right here. So I'm gonna go all the way to the left of my screen right here where my cursor is. You see I drew 780 level right here, the 780, 781, or whatever you want to call it. So I'm gonna show you how to support and resistance. So, all right, right here was our resistance, the 700. It finally broke that resistance. So right here, it couldn't break it. It came back down, but it didn't break our support. And it finally came back up again, finally broke 700 and made a new level up here, all the way to 900. We already drew this 900 level. So I'm gonna show you how the 780 is important. So the 780 is important because this candle, it broke it, went all the way up to 900, came back down. That level it broke, it held our support at 550. So it didn't break our 550 support. That 700 level again, it tried again, 1, 2, 3, 4 times, like we showed before. Didn't break the 550 level, came all the way back up to 780. We drew the 780 because 780 right here was support. So it held the support, went up, held the support right here on this red counter right here that I'm circling around. Tried to go back up to 900 to resistance, couldn't break it, came back down to support. Once it broke support, you knew it had the potential to actually go back down to 699. So if you were getting into a put, this would be a great spot to get into a put. So you see that it held it on this first day because this is the 1-day chart. It held support at 780 right here on this first green candle right here. Held it the next day. It held it the next day. It held it. So for 3 days in a row, it held our support area. So the floor, it held it. Once it actually broke through, now you can say, okay, I already have 700 drawn as a level of support for the next one if it breaks through. So once it broke it, you know that you can ride that thing all the way down to the 700 level. And you see, it only took 2 days really to get to the 700 level. So it broke through 780 and rolled all the way back down to our 700 level. So that was a good level of support. It went through a little bit, bounced back up, but if you could have exited right here. So you could have made an $80 move just from 1 day to the next day, because this is the 1-day chart. So each candle is 1 day. Have any questions, Chris?
JC, can you for some reason it's just black. My screen is just black. Can you stop sharing and share again? See if it's my screen, if it's my computer or yours.
Can you see it?
Hold on. There's something. Hold on.
Yeah, we can see it good on our end.
Okay, I think it's just me. We good. Just
I can see the
And we got
screen.
the 780 level. Do you guys see how many times it bounced in between those two levels and it held? So it held it right here at the 780. It bounced up to 900, tried to break it, couldn't break 900, came right back down to 780 perfectly from when it busted through the first time. So this red candle right here, sorry, I can't draw it again, but this red candle I'm circling with my cursor, it held it perfectly. So this could have been an entry right here for a call. You knew that it couldn't break through support, the floor. You knew that it wasn't breaking 781. It's not breaking through that because the next candle, it started to go back up. And you knew that you could ride this wave back up almost to 900. But of course, like Chris was teaching you, get out before you get to resistance. So you want to get out before that. So say you got in right here, you may have rolled it all the way up to 870 or whatever the case may be. Because let me show you. 870 a few times. So it held it right here at 780, held the support level, didn't break through. So you know that, okay, let's enter a call right here because it's not breaking this support. Then you enter the call on this day, which is 2/1. You see the dates up here. If you see my cursor over here to the left. So this day you may enter right here. And then you're going to ride it all the way up because it tried to break it right here at 876, couldn't break it one day. Second day, couldn't break 876. It pulled back just a little bit, tried to break 876 again, it couldn't break it. So you know that 876 is a great resistance level. It's bouncing off like a bowling ball, like Chris taught you. So it's bouncing off the floor, off the ceiling like a bowling ball, and comes right back down. So you know, like I said, you can get in right here. And if you're swing trading, so say if you don't have time to just look at the market all day, you just want to put in a trade for just, you know, a few days or whatever the case may be. So you get in on this candle and just ride it up before it hits 900 resistance, because you want to get out before it actually hits resistance. So you're actually going to get out right here. You're going to see it stops right here on this day. And then again, the next day it tries to hit it again, couldn't break it. So you're like, okay, this resistance is a good level of resistance. It tried to hit it 2 times, couldn't break it. Let me get out. I don't even want to try to ride it all the way up to 900. I'm just going to get out, get my profits, and go about my day and just take my money. Does that make sense?
Yep. And somebody just said 783 only was hit once or twice.
783?
Mm-hmm.
Kind of like the same area almost.
Right. So let me ask you this, JT. When you're doing yours, like for example, that area of 783, do you round that area 783 up to 785, or do you actually mark 783? How do you do yours?
Sometimes I'll just with Tesla, I look at psych levels. So what I mean by psych levels is because Tesla usually goes by 5s or 10s. So I'll use the 5 level. So I'll round it up to 785 instead of 783. I'll have 783 marked sometimes, but you can change that, and we'll show you how to change that too. So psych levels again is just like looking at the stock. So for Tesla, like I said, it's usually 5s or 10s that it actually stops at. So if you get in at support at 700 and say resistance, the ceiling is at 704, I'll just say 705 just to have that psych level in my head, 705, just to have it by 5, just to make it more simpler for myself.
Someone said, do you feel comfortable? Do you feel comfortable only? I don't go back up to it. Do you feel comfortable only finding 2 other spots to mark a resistance line?
Say that one more time, Chris.
Do you feel comfortable only finding 2 other spots to mark a resistance line? I'm not sure exactly what they're saying. I think they're saying if you only find 2 more spots for resistance, do you feel comfortable going ahead and trading? I think that's what they're saying.
Well, in my case, I trade calls and puts. So, you know, I like to see both sides of the story. So you can make money on both sides. So you don't necessarily have to just draw resistance like support, like Chris is showing you. Each one tells a different story. So if I see that it's free falling as far as a put goes, then I love those as well. So I don't necessarily just look for this line. I look for both.
Yep. And Candace said, how do you know if you have enough SNR support and resistance lines drawn? How do you know when enough is enough?
Wait, you don't want to clutter your screen. So that's why I won't draw too many lines. I just draw what lines look important. So if I see it hit it, for instance, we're gonna look at this 780 level right here. If I see it hit it all these times, 3 times, and then finally break through, I like to see it 2 or 3 times. So the 3rd time, if it finally breaks through like it did over here on support, and it went back down to our next level of support, then that's when, you know, I don't want to draw too many lines. I just like to see it hit it 2 or 3 times and go from there.
Yep.
And then like right here, guys, so 550. All right. Someone tell me, how many times was 550 really a support line right here? It actually hasn't broken 550 since it passed 550. So that's how you know 550 is a strong support line. So it broke 550 way over here in this area. it broke it, and ever since then, it has held 550. It came down, tried to hit 550 over here on this red candle, went back up, came down, couldn't break it, went back up to our resistance, came back down, still couldn't break it. And it's just trading within the channel. So a channel is just meaning that it's trading within support and resistance. It can't break either or. It can, but it come back down. It doesn't, one or the other, it doesn't break.
So meaning, so JT, for example, if it's Monday and you see that Tesla is at 550 or 555, what would you do?
I would get in a call. If Tesla's held 550, like right here, it came down and held it that day. So I knew this day right here, this was a strong support right here. It couldn't break it. So I may enter a call right here just to try to ride it back up and ride it back up. And then we can make a new resistance level where you see right here, this 1 candle, 2 candles, 3 candles. They're all the same. They're all kind of identical. So we can draw a resistance line right there, actually.
Yep. And somebody just asked a great question. Corel Street says, so we don't count the wicks, just the candle.
You can count the wicks. It just depends on your preference, actually. I count the wicks sometimes, just depending, but it all depends on your preference. Some people do, some people don't. So I don't want to tell you not to count the wicks, because the wicks do matter in some cases, because it is the body of the candle. So you do, you want to look at that just to see how far the sellers went down, or how far the buyers went up. So you do want to look at that.
Yep. And this is another way to think of that wick. So for example, if that wick break through your support or break through your resistance, honestly, think about you having a needle, right? And if you poke your needle in like a teddy bear and you pull that needle out, if you look at that teddy bear, will you be able to see that hole in that teddy bear by putting a small little needle in there? Half the time, no, you will not be able to see that hole in that teddy bear, right? So that's kind of what it is. It's like a needle. It's like almost you putting a thumbtack in your ceiling, right? And then pulling the thumbtack out. It's not a bowling ball went through. Just a small little tack went through there, and then it came right back out. So it slid in and slid right back out, right? So it really wasn't a major blow.
All right, so I'm just gonna look over here. You guys see how it's trading within 635 and 550. Once it broke the support, the floor at 635, it came back down to our support at 550. It bounced off of here, so that's a call. It's bouncing off here. This is a great entry. You're gonna get the great price right here because it's bouncing off of this. And then went all the way back up to 635, couldn't break it. Now it's trying to come back down. So at this part right here, 635, you will want to enter a put because it had 1 day right here, 2 day right here, 3 day right here. That's those 3 times that we taught you about that it couldn't break the ceiling. So now it's going to bounce off of that and come back down, and you can try to ride it back down.
I got it.
Yep, Fred, you're right. A whole bunch of too many holes mean it eventually break. Good stuff, Fred.
Exactly. And then, like I said, you don't want to clutter up your chart, so you can go to the one, and you see how it just follows. Kind of follows. It kind of is
bright and early.
I'm gonna show you right here, the 700 level that we had marked. That's over here to the left. All right, right this day, when it finally broke, it went up. But let's look. It couldn't break it all these days right here. It couldn't break it. This is the 4-hour chart, but each little black line is 1 day. It couldn't break it. It couldn't break it. That's how strong level of resistance, and that it can bounce off of that. So you see it couldn't break it all these days. You knew that it had the potential to come all the way back down to our support, 635. So you could have gotten the same trade when it couldn't break the 700 and rolled that all the way back down to 635. And then you could have got out before 635 and made some good profits on a put.
JT, can you mute all hit the mute all since you're the host, I can't do it. Can you hit mute all on everybody, please?
Where is it?
So let me do one thing. Hold on, I might be able to do it. 1 second. Okay, I got it. You good to go. Keep going. You might have to unmute yourself, though, JT.
All right, got it. All right, was there any questions? Got any
All
questions?
right, I don't think so. I think other way to say it said it hit once though. So how do you know that was resistance? It said it hit once, so how do you know that was resistance?
At what level? Where?
What level, Steph, STEF, what level are you speaking of? Right below 700.
Here.
Well, I can't see. I'm still on the gray screen, but
You still on the gray screen?
yeah.
Okay. So,
Yeah, he said yes. He said that level right there, yes.
all right. So we know it's resistance because it came up, it tried to hit it all these times right here. It couldn't break it. It couldn't break it at all. And we already have 635 as the level. So since it couldn't break the resistance, it bounced like a bowling ball, went back to the floor, to the support. 635. It kind of tempered through 635, but couldn't actually break it. So now we're going to throw the ball back up towards resistance to the 700 level. Couldn't break it right there, pulled back just slightly. And then that bowling ball went straight through 700 because it tried to hit it 2 times. That second time, it actually went through and just kept skyrocketing. So that's how you know it's good level of resistance, because it tried to hit it right here, couldn't hit it for like 2 days, came all the way back to support, the floor, couldn't really break the support, because if it would have broke support, it would have went all the way down here, but it couldn't break support. It kind of held support. And then it went back up and just went straight through the ceiling and kept going.
Yep, he said he got you. He said he got you. Perfect. I think you had one other question, JT. So they said, what was the difference between what I was showing and what you were showing? This is same. Everything's exactly the same. She just used she starts with the 1 week time frame. So she used a 1 week time frame, and I'm actually starting to use that too. But that's basically the main difference. Everything else we do is similar.
Exactly. And I'm gonna show you guys before I let Chris get back in. You see how all these weeks it consolidated in between these 2 levels. We already had these levels drawn. And you see how important these levels are? It couldn't break either level on the floor or the ceiling. It just went in between. That's how important those levels are. So you can count. This is 1, this is 2, this is 3, 4, 5. It couldn't break it. And when it finally broke it, it went down to our other level that we already had drawn. This is the week time frame again. So for 1, 2, 3, 4 weeks, it hit all of our levels. It broke through this 780 level over here, went down to the 700 level, and went all the way down to our 550 level. So say if you had a contract for a month and a half out, and you got in up here on the ceiling, you knew that, okay, it couldn't really break it all these days. So, okay, let me get in right here. It can't break it. It tried it 3, 4 times. Let me get in on a put right here. And you just ride that. You say, I'm gonna get a contract that expires a month and a half out. And you just ride that baby all the way down to 550 for a month. Do you know how much money that would be?
A lot. A lot. Oh my gosh. The crazy thing is, man, I was on one of those days. Gosh, man, I don't even want to talk about this day. On one of those days, I rolled that thing down to 560 something? I rolled it all the way down to support. I was so gun-ho on this thing breaking support. I said, I'm not selling. I'm gonna break. It's gonna break it. That thing bounced off support and went straight back to the moon. I say, get out of here. I was up like $6,700. I don't even want to let you know how much I left with, but it was a bad day for the home team.
Exactly. And I'm gonna leave off on that. So like on this weekly chart, bam. You guys see how many weeks it couldn't break the 550? That's how you know it's a strong floor. It's a strong floor. It just bounces off this floor. And again, each candle is a weak candle. So it couldn't break the this floor for several weeks. It couldn't break it. It's still not breaking it. So, you know, if it doesn't break it, the next week, that thing may shoot back up to the next ceiling, bounce through. If it bounces through 635, it may continue to go up. That's how you know it's a strong floor, because they hit it so many times and cannot break it. And that's been for weeks now.
Yep.
All right, Chris, did you have any other questions?
I think we good. I think we might have a Q&A next, but I think we good for right now.
All right, I'm gonna let you show your screen.
All right, good stuff. Yes, Ashley, that was one day. That was one day for me. I told you, you're gonna find out who you really are when you come to this trade, when it comes to trading and making the money. But okay, so that's support and resistance. I hope everyone has a good understanding of support and resistance. And when I say good understanding, I know you're not gonna be perfect with it until you start practicing. Okay. So what the main things you're looking for is support and resistance. Start at your longer time frames, like your week time frame, then go maybe to your 1 year, 1 day, then go over to your 6 month, your 180 days, 4 months. And you're looking at different price levels that's been hit multiple times. And whenever it's hit, it either hit and consolidates there, or it hit and bounces and goes somewhere and goes a different direction. Okay. And I think somebody's had a question about do you buy when you're buying? When I think you say if you don't have support and resistance, do you buy? If you do not have support and resistance, you are guessing. Okay. This is why I tell you, this is chapter 1. We do not guess. We're not gambling. We're making educated guesses. Not educated guesses, but we're making educated moves based off of historical data. Anything in corporate America, if you work in corporate America, anything corporate America, if you're doing some type of report for your boss, what do they always say? How can you forecast? You forecast off of what? Off of historical data. The same thing with the stock market. Everything is based off historical data, okay? So we want to make sure we have our ceiling and our floor, because it's like this. If it's raining outside, do you want to be outside in the rain, or do you want to be in the comfort of your home, underneath, in between your ceiling and your floor? You want to be in your ceiling and your floor, because that's the comfort level, okay? Now, consolidates. What does consolidate mean? Consolidates mean the stock just stays there in the same spot. It just goes. It's just like this, in the same spot. Okay, the same spot. That's what that means. All right. All right. So we probably got like 20 minutes. So in 20 minutes, what we're going to do is we're going to jump back into my screen right quick. And JT, thank you for showing that. Definitely thank you for showing that. That was good stuff. We are going to jump back into my screen, and we're going to show you guys. 1 second. I don't know why my screen is going so slow. All right. We want to show you the importance of buying. We want to kind of push it into you. Hello? Can it?
Screen went out. Screen went out.
We good now? Can y'all hear me now?
I hear you now.
All right,
Yes.
bet. Good stuff. Good stuff. I don't know why I keep getting kicked out. But here we go. All right. All right. This is very important. This is very important. If you understand support and resistance, you can go and trade with nothing else and just trade support and resistance, right? Okay. So it's very important to understand you do not buy a call at resistance. Okay. Can y'all see my screen? Y'all see you all see the put the chat back up. Okay, perfect. You do not buy a call when it's at resistance. Okay, and you do not buy puts when it's at support. If you're gonna play the support and resistance game, at support you buy a call, at resistance you buy a put. Okay, that's one of the games you can play. That's a strategy you can play all the way to the glory land if you wanted to. Okay. Now, the $30,000 challenge, right? When I made the $30,000, the last trade that I made to put me over the 30,000. Think all these, you see all these green support lines? This is how my stuff be looking when I get to it. This is real junky, but that's how it looks sometimes. I keep everything. Let me remove all of them. That was last Thursday, I believe. Last Thursday. So let's go back 10 days, 30 minutes. That was on, and the reason why I want to show you, because this has something to do with support and resistance, okay? 527. Right here. Okay. Was it? Yeah, this is right here. Yeah, I think it was right here. Okay. So it was right here. Okay. So on my screen right now. So I was in a trade, right? I got in early. Okay. So I got in early on a put on Amazon. I got in here, made money. I made some quick money off of this one candlestick, sold it. This is called, I was scalping, okay? So I was scalping this 5-minute candlestick. I scalped this. I was in this candlestick for like a couple minutes, like 2 or 3 minutes. I think I made like $1,000 off of it. Okay, so I'm $1,000 up. Follow this real life thing that happened. So I'm $1,000 up off of this scalp. Okay, I came back in again. I made some money down here. I'm about $2,000 up, right? Then right here, I got in again. I got into another put right here. When I got into this put, my world turned around on me. Everything reversed on me, right? Everything reversed on me. So boom, it reversed. It reversed. It's going all the way up. So now I done lost everything I done made. And now it came all the way back up here and I'm down $3,000. Yeah, I said it. And I ain't to it, and I'm proud of it. I ain't really proud of it, but I said it though. I said it. I lost everything that I had. Well, still ain't sleep yet? Oh, but yeah, so I'm sorry, I talked too much. Yeah, so I was up about $2,000 something, and it reversed on me. So this is what happened in real life, and this is part is gonna tell you about emotions, right? How long did you hold it? We're gonna get into that. This is kind of tell you about emotions. As an emotional trader, I did not. Hold on a second. This doesn't look right. There we go. That's right. No, my system just running crazy. I'm sorry, but I'm trying to fix my system so I can focus. All right. So as a trader, like I said, I was up $2,000, probably like $2,300 in the first before 10 o'clock. And then right at 10 o'clock, you can see that everything reversed on me. So once it reversed on me, I did not want to sell. Like me trying to hit the sell, but my fingers started to jam up and got cramped and it wouldn't sell, right? Like I wouldn't sell it. And I'm up this amount, I'm up good money, right? So once I did not sell, the stock reversed on me and it went up. Okay, it went up. And when it went up, it kept going up. It kept going up. So I'm down about $3,000 at the moment. So keep in mind, it's a $5,000 swing. I was up 2,000 and some change. And next thing you know, I'm down $3,000, right? But this is what I saw. I'm looking at the SPY. SPY is SPY. It's the SPY is 500 of the top businesses in America, right? So the SPY is also something that you're gonna start. I'm gonna tell you guys about this more. The SPY is something that drives the market. Whatever the SPY does, most of the time that's what the market does. It follows as well. JT trades SPY a lot. So what happened was I had my resistance and support drawn on SPY. So even though Amazon was going up, and I'm losing money, I'm looking at the SPY, and the SPY keeps hitting resistance and going down, hitting resistance, it'll come back up, go down, go back up to resistance and go down. It kept doing it. But the same time it's doing it, I'm losing. Amazon is continuing to go up. So I told myself, I'm like, okay, I've already lost about $3,000. So I'm committed to a $3,000 loss. I've already made up in my mind to make a $3,000 loss, right? If that happens. But I say until SPY breaks resistance, I'm not going to sell this stock. I'm not going to sell my position, right? Because I'm looking at SPY, and I know SPY drives Amazon, right? SPY drives Amazon, and the NASDAQ drives, NDX drives Amazon. So I'm looking at that because I'm knowing my ceiling and I'm knowing my floor. I see that it keeps rejecting my ceiling. It's rejecting my ceiling on the SPY. Next thing, hold on, you all a second, get some feedback. All right, so the next thing is, all right, so the next thing I see is, okay, I'm committed. Now, what happens next? SPY rejects again. And I tell you, this one candlestick right here from 32.58 down to 32.53, then this one right here down to 32. Well, no, I would say this. I think it was just this one. Honestly, I think it was just this one. So the whole time I'm losing money, Amazon going up, I'm buying more and more puts. So I started with 4 puts on Amazon. By the time I'm down $3,000, I got 8 contracts on Amazon. 8 contracts on Amazon. 8 put contracts on Amazon. Next thing you know, SPY hit resistance. It kept for like 15, 20 minutes, 30 minutes. I'm having heart attack after heart attack after heart attack. I'm like, because if the Amazon keeps going up, I'm so overweight, got so many contracts in Amazon right now. If it goes up a certain amount, I am done. Because if it goes up one big boy candlestick, every 6, $2, $3, $4, $5, like $1,000 I'm losing, right? Next thing you know, SPY hits resistance again, and it says, boom, it drops. Right here. It went from up here all the way down to, right here to this 32.59, all the way down to this 32.52. That's a $7 swing. I made $6,000 in this one candlestick. I recovered the $3,000 I was losing, and I made $3,200 profit. What did I do? I sold and closed my computer and got out. What I'm telling you is, I was down that amount, but instead of me selling right here at a $3,000 loss, I knew my ceiling and my floor. And I knew in order for Amazon to keep going up, SPY would have to break that resistance. And if SPY did not break that resistance, we were going down, baby. So I was willing to take that risk. That's why I kept buying more contracts the whole time it was hitting, because I knew if it went down, I would get my money back and be able to get out. And that's what happened. Doesn't always work like that. But the thing about it is, what we're going to teach you, what we're going to show you is, just because you're trading Amazon or you're trading Tesla or you're trading Cisco or Nike or Apple, there's other things that make those stocks go certain directions, which is SPY and the NDX. Okay, so that's how I completed the $30,000 challenge. Off of that, I was down $3,000 for about a good 15, 20 minutes, and then one big boy candlestick happened, From right here down there, I'm up $3,200 sold and I'm out. Just like that. It happened in like less than 5 minutes, I'm out. Okay. So it's 10:53. We're gonna have like some 7 minutes of Q&A before we close out, and then we will jump back in tomorrow, give you a recap of what we're gonna do an overview of what we're gonna do tomorrow, and then we go from there. All right. So any questions so far?
Someone asked, can you say we win 8 out of 10 trades?
I wouldn't say 8 out of 10. I'm more so like 6, 7 out of 10, right? Honestly, lately I've been on a nice winning streak lately, so I'm not even gonna lie. I've been on a nice winning streak lately. But the thing is, what we're gonna find out is you see this green line on my screen right here? That green line on my screen. We call it follow the green line. If you follow that green line, you have a strong possibility of winning at least 6, 7 out of 10 times. And the thing about it is when you lose, you just mitigate your losses. You make sure your losses are not big. Okay. Next question.
All right. So someone said, did you use the automation at a set point to get out?
No. So you can set your OCO, your stop losses and all that good stuff, right? You can set your stop losses and everything, but I did not set a stop loss. Somebody else had a question about where did they have that question? And here you go. This is it right here. This is the candlestick, y'all. Oh, this is it. This is it right here. I'm sorry, I got excited. This is it right here. This candlestick right here. This is where I got all that money from. You see how it was going up and hit resistance? It's on the 5. This is on the 5 minute. Let me go down to the 2 minute to show it even better. 527. Oh, I can't see it on the 2 minute. It's just the 5 minute. That's okay. But that was it. 527. Yep, right here. So you see it hit resistance earlier that day, right? And boom, it dropped. Each candlestick is 5 minutes, right? So boom, it went down. And it kind of consolidated. It went up. Consolidate. It came up here, hit resistance, 5 minutes of hitting the resistance. Boom, 5 minutes again to hit resistance. It went through a little bit, right? 5 more minutes of hitting resistance, but it wouldn't go anywhere then. Boom, right here. That candlestick right there saved my freaking life. Right here. This one big boy candlestick. Yeah, this is Thinkorswim TD Ameritrade. Someone says, can you how do you know? Can you be notified when it goes through support or resistance? Yes. You can set an alert on your phone and say, okay, if this is resistance right here, 420.63, you can set an alert on your phone and say when SPY goes through 420.63 to give me a notification. And we'll show you how to do that. Any other questions, JT?
Yeah, there's a few. So I'm trying to.
Yeah, I like Fibonacci. Dwayne, I used to use Fibonacci retracements, but tomorrow you will see that I use something that's, in my opinion, that's better than Fibonacci retracements. But you will see tomorrow when we break that down for you.
Oh dang, Chris, I was talking and I was on mute.
Oh, go ahead.
My bad. I was just talking. But I know you're gonna get into the green and yellow lines tomorrow. There's a lot of questions. I know you're gonna get into it tomorrow.
Mm-hmm.
And then someone said, can you explain how you make a profit on a put if the stock is going down?
Yep. So for example, if I buy a put, right? If I'm up here at resistance and I buy a put, as long I'm basically saying I'm putting my money that the stock will go down. And if the stock goes down, I make money. That's basically all you're saying. You're saying yes, if the stock, I'm betting on the stock going down. And that stock goes down, you make money.
All right. Will you tell them what scalping means?
Yep. Scalping means that you're going to buy, for example, if you're buying Nike, that means you're going to buy a lot of contracts in Nike, and you only plan on being in that stock for about 2 to 3 to 5 minutes. So a lot of people say as soon as they see a red candlestick, they get out of a scalp, right? I'm a little bit more lenient. I stay in about 3 to 5 minutes and then I'm out. So basically you buy a lot of contracts, you get into it. As soon as it makes its move, you might make $300, $400, $500, $600, boom, you get out. Oh, that's good stuff, Ashley. Good stuff. Yep, and then you get out.
All right. And someone was asking, you use support and resistance for entries and exits. Yeah.
Yep, exactly. Soon I'm late, basically when I'm trading like I'm supposed to, when I get to, if I'm in a put and it gets to support, I'm out. Right before it hits support, I'm out. If I'm in a call and it gets to resistance, as soon as it gets to resistance, I'm out.
All right. Will you explain, because they're asking about the 3 times a day, the PDT rule as far as the cash account goes?
Yes. So with a cash account, when you have a cash account, you can trade unlimited, right? But if you have like a margin account, you cannot trade unlimited. So what we're going to do is everybody should have set up a tier 2 cash only account. And what we'll have you do, you will have you call TD Ameritrade and verify that it's a cash only tier 2 account. And so you can trade however many times you want to, as long as you have the funds there. Okay.
Yeah, you got a lot of questions. Some of it I know you're gonna go over tomorrow.
Mhm.
And you sent out an email as far as how to set up the Thinkorswim account, right?
Yep. So I'm tomorrow. That yes, Thinkorswim account that was in the first email. So you should have that in your email. How to set up the Thinkorswim account. Tomorrow you will receive this replay, and I think you will receive one other email from me as well. As far as I forgot exactly which one you receive tomorrow, but you'll definitely receive this replay tomorrow morning.
All right. Someone was asking, when you seen that Doge account on your Amazon, did you use spot index at that point to ensure that you should hold a position?
Let me go back to that play. Honestly, I probably didn't even pay attention to it. I was more so focused on resistance than that candlestick. I was more so focused on resistance. So honestly, I can't say. But my whole thing was just strictly resistance. If it breaks resistance, I'm out. If it don't, I'm good. All right. So with minimum to start trade, you can start whatever you want to start with. 300, 200, 400, 500, 1,000, 2,000, 3,000, 10,000. Start whatever number you want to start with. Okay. All right. So hopefully everyone enjoyed day 1. Okay. So in your book, in this book right here, the first chapter should say, first page should say goals. Oh, I won't be able to use things. So yeah, so if you're in Canada, you can find a brokerage in Canada that allows you to trade US stocks. Okay. The platform is the same regardless. It doesn't matter. You can take the platform wherever you want to take the platform to. Use the foundation through the platform. But find a brokerage that allows you to trade US stocks and just figure out what platform they use and just familiarize yourself with that platform. But the foundational thing that we teach, you will be able to use it regardless. Yes, so you can trade more than 3 times with less than 25,000. You can trade unlimited times, right? I started off with $1,200 and I was trading unlimited, right? As long as you have a tier 2 cash only account. So tomorrow, what we are going to do is, so like I said, in this book, for chapter 1, you should have support and resistance. If you can, tomorrow before the class starts, just go over support and resistance. Think about what we talked about. Go back and watch the video. Read over support and resistance, because tomorrow we're going to do chapter 2. Okay, chapter 2 is basically those green lines and those yellow lines. We're going to tell you what those green and yellow lines are and how they actually work. Okay, so that's chapter 2 tomorrow. All right, so hope everyone enjoyed first night. We have a good one. Right now, I have Sheena's Cash App and I have Juju's Cash App. I do not have Candace Jackson Cash App. So if you can put that in the and I don't think I have Jay Benjamin's Cash App either. If you can put that into the thing, we'll be good to go. All right. So enjoy y'all's night. See y'all tomorrow at 8 p.m. Tomorrow, 8 p.m. Y'all have a good one. Says the crazy.